Hello everyone, a very good evening. Welcome to the final marathon of the BRBL paper for your CAIIB June 2026 exam. So, today we'll be revising all the four modules, the complete syllabus, the most important topics for your final revision. So, tomorrow is your exam. Let us give it our 100%. Let us gear up and revise all the important topics so that we can score 60 plus and qualify the exam. All right, so everyone quickly join and like the session. Let me know in the comment section who all have joined. Give me a confirmation in the live chat. Everyone who all have joined, please give me a confirmation and share the video so that other aspirants can also join the session. What we are going to do first we'll be revising the module D, right? That was left, the whole module D, all the units of module D. We'll be doing the theoretical revision. Then we will move on to practice all the questions from the module A, B, C, and D, all the four modules. We'll go in the backward direction. First D, then C, then B, and then A, because the most important modules are C and D. Then we have module B and finally module A. So this is the sequence that we are going to follow. All right. So are we good to go? Let us start and keep the session interactive. This is a live class. So if you come across any doubt, if you want me to repeat any point, repeat any term, do let me know. And we'll go in a bit fast-paced manner because we need to revise the whole syllabus. Okay. So let us start. So we are starting with the module D. Unit 25, the Indian Contract Act, which is extremely important, and definitely you'll see questions, minimum four questions will be there from this unit, right? First, we'll start by understanding what is the meaning of a contract, what makes a valid contract. So, normally, as human beings, we make promises to one another. When one party makes a promise to another, right? And then we add some legal binding to it, then it becomes the contract, right? So simply, when a proposal is made, when a promise is made from one person and the other person agrees to it, like I promise you that I will provide you the whole syllabus of BRBL. You agreed to it and you joined the course. Okay, this is what? This is an agreement. When one party proposes something, another party, they give their consent to it. This is just an agreement. Now, if it is made enforceable by the court of law, then it will become a contract. So, contract means an agreement enforceable by law. There are rights and obligations arising out of the contract, and they are enforceable in a court of law. That is, even if one party, they work against, they do something in contravention to the agreement, then it can be a suit can be filed in the court. So all contracts are agreements. We can say that all contracts are agreement. There must be an agreement, but all agreements are not necessarily contract. An agreement will become a contract only when there is legal enforceability in it. All right, so when there is an agreement between two or more parties which is enforceable at law, then it becomes a contract. So proposal is simply a promise when one person is willing to do something, right? Acceptance is when the other party, they give their unconditional consent to it. Communication is completed when I propose something to you and you give your consent to it. You give your agreement to it. Then it is accepted and it becomes a promise. Now this consent should be in a manner where both the parties, they know what they're agreeing to, what contract they're entering into. Both the parties must agree on the same thing in the same sense. Both the parties must agree to the same thing. I promised you that I will teach you the BRBL paper. Your other three papers were taught by other mentors. Okay. But if you understood that I'll be teaching you the other papers also, this is not consensus ad idiom. Consensus ad idiom means both the parties are agreeing to the same thing. So a contract should be made by free consent of all the parties. If someone forces you to agree to something at a gunpoint, or blackmailing you into doing something, that is not free consent. There should be free consent in a contract. Contract should be made by parties who are competent to contract. Competent means if a person is of minor age, below the age of 18, or if the person is of unsound mind, they do not understand what they're doing, any contract entered with them or by them is not a valid contract. So a person should be above 18, majority age, and a person should be of sound mind. They should be able to understand what they are doing, what they are agreeing into. Then it will be a valid contract. It should be for a lawful consideration. Both the parties should give something and get something in return. If let's say two persons they come into a agreement to conduct a business, share the profit, then both of them should get equal right to the profit. Proper consideration should be there. Lawful object, anything, any contract entered for a illegal activity, for something that is illegal, not as per the government of India's law, it is obviously a void contract. It is not a valid contract. Okay, so there are certain conditions that make a contract valid. There should be legal intention. If not, it is a void contract. For a lawful consideration, something in return. Free and genuine consent by the people who are capable to contract, and it should not be vague. There should be complete clarity to all the people involved, certainty and possibility. It should not be something, if I say that um uh, I will help you maybe walk on water. I will help you clear or cross the river. You can walk on water. Is that possible? That is not humanly possible. Right. So anything, any contract which is entered for something which is completely vague, not possible, is also void by law. All right. So contracts can be oral, it can be written. If otherwise not stated by law, then it can be oral as well, right? So valid contract are those that are enforceable by law by all the parties involved. If any of the party says that the other party has contravened, they can take it to the court, right? Then voidable, enforceable at the option of one parties, not at the other. For example, someone forced you to enter into a contract at a gunpoint. You can go to the court and get that contract rescinded, cancelled, right? The aggrieved party can set it aside. Absolutely. Void, which is not enforceable by law at all, like entering into a contract with a minor or entering into a contract for dealing with something that is illegal. It is void, completely void, not allowed at all. All right. So these are the things that will make a contract a valid contract. Okay. What about a contract that is entered into by a bank? So all banking services, transactions, they are actually a type of contract between the bank and the customer. The relationship between the banker and the customer is a transactional relationship, be it acceptance of deposit or be it a loan or any other service. So when money is deposited in the bank, when money is deposited in the account, bank becomes the debtor and the customer becomes the creditor, right? Customer owes the money, customer owns the money, and bank has the liability to pay it back to the customer on demand or on maturity. When the customer has availed a overdraft, cash credit, term loan, or bill discounting, so now the bank becomes the creditor and the customer is the debtor. Now the customer is obliged, liable to pay back the bank. When the transaction is of a safe custody of securities, valuables, then the bank is the bailee, holding the securities, valuables, bonds of the customer on behalf of the customer. And the customer is the bailer owner, right? Ancillary services like remittance, collection of check, bank is the agent, customer is the principal. And safe deposit locker, bank is the lessor, customer is the lessee. All right. So this question is asked in your exam. In various exam cycles, the relationship between a bank and a customer has been asked. So go through this table very carefully and keep it in your mind for tomorrow's exam. Now we'll be discussing the different types of contracts one by one as defined in the Indian Contract Act. First, we have the contracts of indemnity. It is when one party promises to save the other from a likely loss to be caused. The loss could be caused by one of the party or by a completely unrelated third person. So the promisor is called the indemnifier. Okay. The indemnity holder is the promisee or the person who is being indemnified, right? So what is the indemnifier required to do or required to pay? All the damages that the promisee may be compelled to pay in a suit, or all the costs that the promisee may be compelled to pay, all sums in a compromise, and they also have the right to sue for specific performance. All right. So these are the things. A contract. So in this regard, obviously, we can say that an insurance policy is a contract of indemnity where the insurance policy company, they protect the policy holder, the person who has bought the insurance policy. I bought a car insurance policy, and if my car is damaged due to an accident, I can approach the insurance company and recover the damages. Okay, so the promisor is the indemnifier who promises to save the promisee or the indemnity holder from any loss, which can be by the conduct of the promisor or by any third party as well, right? All the damages, all the compromise, costs, specific performance, anything which is entered and mentioned in the contract of indemnity are the rights of the indemnity holder. Okay. Now, a contract of indemnity could be express or it could be implied. Express means something which is clearly stated, written down in the contract. Implied means something which is understood, derived from the judgment. Some things are not mentioned in the Indian Contract Act, but they are understood as per the judgments of the various courts, high court, civil court, right? If let's say in one of the cases, state versus the Bank of India, if A requests B to do an act which is manifestly torturous and it injures the third party, B is entitled to implied indemnity from A. Okay. Now we have the timing of liability. When will the liability of the indemnifier arise? Whether when the cause has actually happened or when the indemnified has paid for it and then they will recover it. So this has varied from case to case. The time has not been mentioned in the contract, it just says immediately. As per the English law and in India, the term immediately is used. When notice is to be given to the indemnifier as per the terms of the indemnity, they have to abide by it immediately, as soon as possible, without any undue or unnecessary delay, right? Some courts they say that liability starts only after the actual loss is paid. Others they allow that the indemnifier has to pay before the holder has to pay, right? And regarding immediately, it means as soon as possible without any unnecessary undue delay. This was basically covered in a particular case. What happened there? A person's car was stolen, which was covered by an insurance policy, and in the hurry they informed the police, they filed the FIR, but they forgot to inform the policy company, insurance company. And they later on, after 1 month, they went to the insurance company. The company said that you had to inform us immediately, so we are not liable to pay for the loss. This was taken to the court, and the court ordered that because the immediate reporting to the police was done, so it conveyed the genuineness of the assured. So indemnification cannot be denied even if reported to the insurer after 1 month. So immediately means as soon as possible. Okay. So that is a contract of indemnity. Next contract that we are going to study about is the contract of Guarantee. Now, what is a guarantee? Guarantee means that one person is going to perform the promise or discharge the liability of a third person in case that third person defaults. The guarantee also, it may be written or it can be oral, right? Now, whether it is indemnity or guarantee, it depends upon the language which is used in the contract. So the person who gives the guarantee is called the surety. The person in respect of whose default the guarantee is given is called the principal debtor, and the person to whom the guarantee is given is called the creditor. For example, I want to appoint someone who would manage my social media account, right? And you are a trusted friend. You recommend to me a person that this is a good, genuine person, and they will manage your account in a good manner. It will be profitable, and so on. I am ready to employ that person, but I need some surety, some guarantee from your side that if this person does not perform as promised, then why should I bear the loss? So I am the creditor, I am the beneficiary here. The surety, you are going to act as the surety, and the principal debtor is the person who is required to perform the activities. When we are talking about a loan, so the creditor or the beneficiary is the lender. They are the person in whose favor the guarantee is being given. Surety is a third party, and principal debtor is the borrower. So the first express contract is between the principal debtor and the creditor. Okay, principal debt. Now, if the principal debtor defaults, the surety will come into the situation and pay on their behalf, right? And then the surety will step into the shoes of the principal creditor, the beneficiary. This is an implied contract, implied promise by the debtor to completely indemnify the surety. So there are two contracts involved: express contract between the creditor and the surety, the guarantor. The surety promises to discharge liability upon the defaulters, the debtor's default. Unconditional guarantee. And then when the surety makes good the default, they pay on behalf of the principal debtor, then they have the complete right to recover it from the principal debtor. Okay, so that is there. That is there. What is the difference between indemnity and the guarantee? The number of parties involved in indemnity are two: the indemnifier and the indemnity holder. Guarantee, there are three parties: the creditor, principal debtor, and the surety. Number of contracts in an indemnity is only one. In the guarantee, there are three: express guarantee, express contract between the principal, between the surety and the creditor, and implied indemnity between the surety and the principal debtor. Nature of liability: the indemnifier's liability is primary and independent, but a guarantor, surety, it is only secondary and conditional, coextensive. Only when the principal debtor defaults, then the surety's liability will arise. The creditor cannot directly approach the surety, the guarantor, to pay the debt. No. Only when the principal debtor defaults, then the surety will enter the situation. Core purpose of the indemnity is to compensate for a suffered loss. For a guarantee, it is to provide assurance for the performance of a promise or discharge of the debt. That if the principal debtor defaults, then the surety will enter the situation. Okay. Now, the two contracts that we were talking about, the settlement, when the surety and the surety settles the debt, discharge the debt, promise, complete the promise to the creditor, then the surety occupies the place of the preferred debtor. And upon the surety fully discharging the debt, they will now step into the shoes of the creditor. This is the doctrine of subrogation. Subrogation. The surety literally steps into the shoes of the creditor, taking over all the rights, legal standing, remedies to claim the entire sum directly from the principal debtor. So the surety will pay the creditor on the debtor's default. Then the surety has the right to recover it from the debtor. Any security which has been given by the debtor to the creditor, doesn't matter whether the surety was aware of it or not, the surety will have the complete rights that the creditor had over the security, right? The surety will have the complete right over it. Okay, so that is how the contract of guarantee works. So there should be consideration, there should be complete clarity that how the surety will recover their debt from the debtor. Now, what is the meaning of continuing guarantee? Continuing guarantee means when the responsibility of the surety doesn't end on one transaction, it continues to more than one transactions, beyond one transaction. That is known as a continuing guarantee, a guarantee that extends to a series of transactions. If Mr. A, for example, contracts with Mr. B, a shopkeeper, to allow Mr. Mrs. A to take whatever good she may need from the shop up to the amount of 20,000. So Mr. A will be liable for the debts incurred by Mrs. A up to the given amount. This is a continuing guarantee, right? The continuing guarantee can be revoked by the surety as to the future transaction. When the surety says, I'm not going to be liable for the future transactions, then the surety ends there. The guarantee ends there. All right. Yes. So that is the continuing guarantee. What is the meaning of variance in term? If the principal debtor and the creditor they change the terms and conditions of the contract entered without the knowledge of the guarantor, without the knowledge of the surety, now the surety is discharged. They are no longer liable to be a part of the contract. They will not be liable for the future transactions, subsequent transactions beyond the modification or variance made without the surety's consent immediately. It will immediately discharge the surety from the subsequent transaction, right? And if let's say the guarantees are obtained by keeping silent on the material fact, misrepresentation, or the creditor has negligently lost the security, that will also invalidate the guarantee. But what will not discharge the surety from the liability? Just because the principal creditor delayed, there was a slight delay to sue the debtor, then it will not free the surety. The surety will not be free from the liability by mere forbearance, right? So, this is the meaning of continuing guarantee. What about death of the guarantee? Normally, when the surety dies, death of the surety, when the surety dies, the guarantee ends from there. Normally, this happens. Okay, right. So, now when the surety gives the revocation, the continuing guarantee can be revoked by the surety via a direct notice to the creditor. So now the surety will not be responsible, will not be liable for the future transactions after the notice is received. Past transactions, they remain legally guaranteed, right? Guarantee is not limited to a single transaction if it is a continuing guarantee, and it runs from the exact date a demand is made, not the date of each individual transaction. Death of the surety, general rule says that on the death of the surety, the contract of guarantee for the future transactions is now revoked. Banking protocol immediately break or freeze the running accounts of a borrower when they receive the information of the guarantor's death. Death, however, does not legally release the obligation for the past debts, right? So now the legal heirs of the surety will remain liable to the strict extent of the inherited estate. If the surety dies before fulfilling the liability of the obligations prior to their death, then the legal heirs will be responsible. Co-surety. Co-surety means when there are more than one persons who have promised to pay on behalf of the principal debtor on default. So the co-sureties are legally liable to pay the equal sum. One, if the bank, let's say, releases one co-surety, it will not release all the other co-sureties also automatically. Interconnection, right? Releasing of one co-surety does not discharge the other co-sureties, right? If let's say there were three co-sureties to a particular debt and the default occurred, the remaining co-sureties will have to pay for it, but they have the right to recover it from the third party who had left the agreement. They have the right to recover it. Okay. So this is the contract of guarantee. This is the contract of guarantee. Remember the two contracts, express contract and the implied contract. Then we have the contract of bailment. You have also studied about the contract of bailment and pledge earlier in the module B also. What is the contract of bailment? Bailment means when any movable good, when any movable good is transferred, the possession is transferred to another person for a particular purpose. So bailment is derived from a French word baillir. It means to deliver. It means handing over or change in possession of movable property from one person to another for a specific purpose, for a specific time, to perform a specific duty. So the owner of the goods is the bailer and the person who is going to use the goods is the bailee. Ownership is not transferred. If ownership is transferred, that is a sale. But here the goods must be returned or disposed of according to the contract once the purpose is accomplished. All right, so delivery of movable goods from one person to another for a specific purpose. Bailer is the person delivering the goods. Bailee is the person receiving the goods, movable goods. So there should be delivery of possession only. Physical handover could be there, that is actual delivery. When I physically hand you over something, let's say a car, you are running a taxi business, I hand you over the car to be driven by some of the drivers from your company. That is actual delivery. Constructive means symbolic handover, endorsing a railway receipt or a bill of lading. Let's say some goods are kept in a go down. I give you the key to the go down or the warehouse, right? So delivery could be both actual as well as constructive. It should be a contractual basis. Formal express contract can be there. Implied can also be there. What is the meaning of implied? Let's say I was just taking a walk in the park and I dropped my phone there in the park. You found it on the pavement. Now automatically a bailer bailee relationship is formed, so you become the bailee. It is your right, it is your responsibility to return the phone back to me, right? Finding lost goods legally creates an immediate bailer bailee relationship. Specific purpose for repair, storage, transport. Specific purpose, specific goods, existing goods are delivered. And once the purpose is over or once the time is over, then the goods will be returned back from the bailee to the bailer. Okay, so bailee is different from sale. In the sale, a price is paid for the goods, money is exchanged, and the ownership is transferred entirely to a buyer. But in a bailment, just the possession is given, ownership is still with the bailer. In a bank deposit, this is a debtor creditor relationship. The bank is going to use the money, but they have to return it back to the customer on demand or on maturity, right? Or for now, when the items are kept in a safe deposit vault, then a bailee bailer relationship exists. Bailment, the bank is keeping the items of the customer for a particular purpose. Safe deposit vault. That is a bailer bailee relationship, but depositing money into a standard bank account, that is a debtor creditor relationship between the bank and the customer, that is not bailment. Now, there are certain responsibilities and certain rights. Whatever are the rights of the bailer are the responsibilities of the bailee. Whatever are the responsibilities of the bailee, or whatever are the rights of the bailee, they become the responsibility of the bailer, right? Vice versa. For example, when I am giving you the car for a particular purpose, I'm the bailer, you are the bailee. I need to inform you each and everything, all the material information about the car. If it needs regular servicing, or if it can, the engine can run continuously for 6 hours only, after that it will heat up. It is my responsibility to tell you about the material facts or any information that is necessary for the particular use in a particular manner. If I fail to inform you, and because of that some loss is caused to you as the bailee, I will be responsible to compensate for the loss. Right? You, on the other hand, bailee, on the other hand, has the responsibility to use the good as if it were your own, to take all the necessary precaution, to follow all the considerations that I, as a bailer, informed you. Okay, so the bailer must disclose to the bailee all the known faults that are going to materially interfere with the use or expose the bailee to extraordinary risk. Right? If the bailer fails to disclose, bailer is responsible for the damages. Right? If, let's say, the goods are bailed for hire or monetary gain, the bailer is always responsible for the damages, whether they were aware of the fault or not. This is a strict liability which applies on the bailer. What are the duties of the bailee? What are the duties? They must take care of the goods as if they were their own. If they take care and still any loss happens, then the bailee is not responsible. But if the bailee does something inconsistent, for example, I bailed some maybe hot water bags to you. I'm the bailer, you're the bailee. And I clearly told you that the hot water bags should be continuously used for 1 hour only. You did not follow it, and because of that, the bottle burst and some damage is caused to you. You will be responsible because I had given you clear instructions to use it for 1 hour only, continuously. You did not follow it, right? Another duty, the bailee must return the goods as soon as the time expires or the purpose is accomplished. And the unauthorized, if the bailee does something which is in contravention with the bailer's instruction, then it becomes a voidable contract, and any damage is caused to the goods, the bailee must compensate the bailer for any damage arising from unauthorized use. Very important topic, the legal consequences of mixing of goods. Let's say I, as the bailer, I delivered you sacks of cotton to be used in a industry, to be used in a manufacturing firm to make cotton clothes, right? Or maybe to sell it in the retail market. What happened? You mixed those cotton sacks with some of the sack that you obtained from some other person, or maybe you grew it on your own farm. This is the mixing of goods, mixing of the bailer's goods with the bailee's own good. If this is done with the bailer's consent, with you told me that I'm doing this, I said that okay, it is fine, then both the parties will share a proportionate interest in the newly produced mixture. The profit will be shared proportionately. If you did not inform me about the mixing without my consent, then the property remains with the respective owners. The bailee must bear the entire expense of separation or division and any damage arising from the mixture. If there is, let's say, some natural increase in any absence to the contrary, if there is some extra profit which is derived from the bailed goods, the bailee must deliver any increase which occurred from the bailed goods. The example that is given in your book is what it is basically. um when, let's say, a person leaves a cow in the custody of another person, the bailer left his cow in the custody of the bailee, and the bailee had agreed to take care of the cow. The cow delivers a calf. Now the bailee is bound to deliver the calf as well as the cow to the bailer. Okay, so these are the rights and the duties. What are the bailee's rights? whatever cost had incurred on using the goods or performing the purpose or maybe safekeeping, they have the right to receive it, right? If the bailee receives no remuneration, they can keep the goods, retain the goods till the bailer pay all the necessary money which is involved. Right of lien, if the bailee has rendered labor or skill, they have the right to retain the goods until the due remuneration is paid. General balance security, whenever money is kept with the bank, factor, high court attorney, policy brokers, they can retain goods as security, right? So these are the things. Banks have something which is known as implied lien, implied lien, banker's lien. This is known as implied lien. So that is the contract of bailment, delivery of movable goods for a particular purpose. Now, when this particular purpose is to secure a payment of debt, you took a loan from me and in return of that, you delivered some movable goods, saying that you can keep the goods and if I default, you can sell the goods. This is also a sort of bailment, but the purpose is to secure the payment of a debt. Then it is particularly known as a pledge. So, this is the contract of pledge. Bailment of goods for the security, to act as a security for the payment of debt or the performance of a promise, is known as the pledge. So the bailer or the owner of the goods is now known as the pawner, pawner, owner, pawner, and the bailee, who is the creditor, will be known as the pawnee, right? So it requires actual or constructed delivery. Actual means when you give the physical possession to me. Constructive means you have kept the goods in a warehouse and you gave the acknowledgement that these goods are kept on behalf of such and such creditor, or maybe you hand over the key to the warehouse to me. That is a constructive delivery. Existing specific property only, not future goods. Pledge cannot be created for future goods, right? And the general property remains with the pawner. Just the specific interest is created in favor of the pawnee, right? Pledge is valid even if the pledgee has only a limited interest in the goods. If the goods that are stored in the warehouse are actually worth rupees 50 lakhs, but you took a loan from me of 30 lakh rupees. So my interest in the good is only of 30 lakh rupees. It is a limited interest. So remember, there's a difference, distinction between a pledge and a lien. What is the difference between pledge and a lien? In a pledge, the pawnee gains a legally protected special interest in the goods. In a lien, there is no transfer of interest, strictly a right of retention. They can only retain the goods, they cannot sell the goods, right? In the pledge, the pawnee has the explicit power to sell the good. The interest is transferred in a pledge to the creditor. But in a lien, there is no right to sale, only retention. And the pledge is assignable. Assignable means you pledge the goods to me, I am the pawnee. I can further repledge the goods to another person. But in a lien disappears instantly the moment physical possession of the goods is lost, right? Pledge is an assignable legal right. If you assigned the goods, if you pledged the goods to me worth rupees 30 lakhs, I can repledge the goods to another person worth rupees 30 lakhs only, right? Now, what are the rights available to the pawnee? They have the right to retain and sue. The pawnee can file a case for the debt and retain the goods as security. The pawnee has the right to sell the goods only after giving a formal notice to the pawner. Very important point. This has been asked in your 2025 exam. If let's say, if let's say the pawnee sold the goods after giving a proper notice to the pawner, what will happen? Let's say the amount of the debt was 30 lakh rupees, right? But the sold goods, um, the proceeds that arise on it on the sale was only 25 lakh. So the remaining 5 lakh rupees, the pawner is liable. If the sale proceeds are less than the debt, the pawner remains fully liable to pay the balance. On the other hand, if there's any surplus, the debt was of 30 lakh rupees, the goods are sold, and 32 lakh rupees is generated from the sale. If the sale proceeds are greater than the debt, the pawnee must pay the surplus back to the pawner. So I will retain the 30 lakh rupees and I will give you the 2 lakh that was surplus amount. So remember, pawnee has to give the notice. Pawnee may sell the goods, but they have to give the notice to the pawner. To the pawner. This is the contract of pledge. And the last type of contract that we are going to discuss is the contract of agency. Agency means I am teaching you this BRBL paper, right? If I tell someone else, if I give the duty to someone else to teach on my behalf, that is the contract of agency, right? If I tell someone to perform some action, to perform some duty on my behalf, I am the principal and that third party is the agent. Agent. Okay. So an agent is employed to do the acts for another or to represent them in dealings with third persons, right? Whatever a person can do personally, they can do through an agent. Whatever I can do personally, I can get it done through another person, except for personal act. Let's say my marriage is fixed with a person. Can I ask someone else to marry on my behalf? Not allowed. It is a personal act. Not allowed. If I am hungry, I tell someone else to eat on my behalf. It is a personal act. It cannot be done. Right? So, except for from personal acts or official acts, whatever a person can do personally, they can get it done from another person on their behalf, right? Whatever contracts are entered into by an agent, they have the same exact legal consequences as if entered into by the principal directly. I am the principal. I appointed a person to act as a agent for me and enter into a mortgage contract with a bank to avail a loan or maybe to buy a house. They're acting as a broker, as my agent, and they bought the house. It is my house. They conducted the transaction on my behalf. So that is the contract of agency. There should be competency. Both the agent and the principal should be competent, legally competent. They should be of majority age. They should be of sound mind. Now, there's also a conditionality involved in the soundness. If, let's say, usually I am of sound mind, from Monday to Saturday, I'm of sound mind. Then on Saturday, I go out to party with my friends and I'm under the influence of alcohol. Now, for limited time, I become unsound mind. So, the period for which a sound person is of unsound mind, they cannot enter into a contract. Other than that, they can. And if say, let's say someone who is usually of unsound mind, let's say someone who had been hospitalized for 1 month, they are discharged, they come to home, they're completely fine now. So earlier they were unsound mind, now they are sound. Now in this period of sound mind, they can enter into a contract, right? So remember this conditionality. All of these type of situations will be asked in your exam. Case studies, scenario based questions, which are actually quite interesting, right? So a person should be the age of majority and sound mind to employ an agent. Similarly, an agent can represent the principal only when they are of the age of majority and of sound mind. All right. Unlike standard contracts, creating an agency does not require monetary consideration. It can be expressed, it can be employed. Always monetary consideration is not involved. If, let's say, I am unable to visit the bank for some reason, I ask my brother to do so and get my passbook printed, or maybe do anything that I can do. My brother won't ask me for any payment, so there's no consideration involved. Still it is a contract of agency, so it can be expressed, it can be implied, right? Then the agents are of various types. It could be by the extent of authority. Special agent for a single specific transaction. I give someone else the duty to sell a house on my behalf. I'm, let's say, not present in India, but I want to sell a house here. I can give the right or power to some other person to do that, to a broker. General agent, who is going to do all the acts in a specific line of business, like for the selling of house, giving a public notice, um, calling the bids, signing all the documents, completing all the necessary paperwork, everything, right? Universal agent, unlimited authority to bind the principal to any legal act, even beyond a specific line of business. So a person can do anything on my behalf. This is the extent of authority. By the nature of work, it could be a mercantile agent like factors, auctioneers, brokers. A banker also acts as an agent for their customer for specific transaction. And a non-mercantile agent, who is going to represent me, like solicitors, attorneys, insurance agent. What are the duties? Again, whatever are the duties of the principal are the rights of the agent. Whatever are the rights of the principal are the duties of the agent. Okay, what are the duties of the agent? They should act rationally with care, skill, and diligence to perform the act of the principal. They should render proper accounts on demand. They should make no secret profit. If any unauthorized benefit results from the agent acting on the principal's account, they have to give it to the principal. They need to pay the principal all received sums. What are the rights of the agent? Agent will retain the advances which are due to them as remuneration. If they are promised to be paid certain monetary consideration, they can retain the goods or the papers until paid by lien. They have the right to indemnity. All the acts that are done by the agent as per the instructions of the principal in good faith without any negligence, and let's say any loss or damage is caused, the principal has the responsibility to indemnify the agent. The agent also has the right to be compensated for any injuries caused by the principal's neglect. And that is all. With this, we have completed the Unit 25, the Indian Contract Act. If you have any doubts, any queries, any questions till here, then you can ask. I hope all the points are clear, right? All the points are clear? Okay. Next, we are going to start with the Unit 26, which is the Sale of Goods Act. The Sale of Goods Act. From this unit, some very important topics are there, like the difference between sale and agreement to sell. Then, what are the rights of an unpaid seller? These are some of the very important topics. So, what is a contract of sale? We have already discussed, in a contract of sale, monetary consideration is paid in return of movable goods. Okay, and the ownership passes from the seller to the buyer. Okay, so the scope, movable property is covered by the Sales of Goods Act. The Sales of Goods Act of 1930, it extends to the whole of India. The commercial world, all the contracts that are made in the commercial world for the sale and purchase of movable property. Goods means all the stocks and shares, growing crops, grass, anything which is originally attached to the land, but it will be severed and separated before being sold to the buyer. Insurance company is an indemnity holder or indemnifier. Indemnifier. The insurance company. I have bought a health insurance from an insurance company and I had to pay some hospital bills. So, who is going to pay me? The insurance company. The insurance company is the promiser. I am the promisee. I am the indemnified. I am the indemnity holder. The insurance company is the promiser. The insurance company is the indemnifier. Clear now? The insurance company is the indemnifier who is going to pay for the loss, pay for the liability to the indemnity holder. Okay, great. Right? So, movable property is governed by the Sale of Goods Act. Immovable property, actionable claims, money, that is governed by other acts like the Transfer of Property Act. Okay. Who is the buyer? Who buys the goods for their own use? I am buying the good for my own use. I went to the shop and I purchased a loaf of bread for my consumption. I am a buyer. But if I purchase the loaf of bread to sell it to some other persons, I am not a buyer. Okay. Buying of goods for my own use. Sell is a person who sells or agrees to sell. Price is the monetary consideration. Goods means every kind of movable property, stock, shares, crops. It does not include actionable claim, right? Delivery, voluntary transfer of possession from one person to another. And when the whole agreement is completed, both the parties they perform their duty, then the ownership is also passed. Mercantile agent means, let's say, someone who is acting on behalf of the seller to sell the goods. He becomes a mercantile agent. Or someone who buys on behalf of the buyer. He again becomes a agent of the buyer. Okay. Then movable property. Now the goods can be specific goods or it could be future good, right? Specific goods, I enter the shop and I clearly mention that I want this piece of clothing, this piece of clothing, this piece of clothing. I've paid the price, I'll take it with me to my home. That is specific goods, identified, agreed upon at the time a contract of sale is made. Future goods, I place an order with the seller that I need to buy 100 t-shirts. The seller said that, okay, I will start manufacturing the t-shirts now and you can get it delivered after 1 week. That is future goods. To be manufactured, produced, or acquired by the seller after making the contract with the buyer, right? And then when the contract of sale is to be completed, then the proof of possession or the control authorizing the transfer of goods like the bill of lading, dock warrant, warehouse keeper's certificate, railway receipt, multimodal transport document. If let's say I have purchased the goods will reach me, or let's say I will use it after 1 month. So for 1 month, the goods are to be kept in the warehouse. Then I have the ownership. The warehouse keeper's certificate will be given to me as a document of title, right? So what are the features of a contract of sale? It is bilateral. Two distinct persons should be there, the buyer and the seller. Money should be paid for the transfer. It cannot be barter. Goods and goods exchange cannot be done. If I am purchasing t-shirts from you, I need to pay money in consideration. I cannot give you shoes in return of t-shirts. Barter, commodity exchange, not allowed. Sale of good act is limited to movable property only, not immovable. This contract could be oral, written, or maybe implied. Delivery could be immediately or postponed also. The seller says that, okay, you pay me the money, I will deliver the goods to you after 3 days. When we do online shopping through an e-commerce platform, I pay the price now, or maybe I place the order and I select to pay on delivery. The goods are delivered to me after 3 or 4 days. So the delivery or the payment can be postponed as well. And certain conditions, very important, which has been asked in your previous exam. Sale, absolute or conditional. When the sale is absolute, no terms and conditions are yet to be fulfilled. Right? That is absolute. No conditions to be fulfilled. Everything is done. It is unconditional. Conditional means sale is final only on fulfillment of agreed conditions before or after conclusion. If let's say I am the buyer, I place the condition, I will receive the goods, I will make the payment for the goods only when the goods are of a certain quality or the goods are delivered to me on within 2 days. That is conditional sale, right? So when a sale is conditional, It will become complete only when the conditions imposed are fulfilled. Thus comes the difference between sale and agreement to sell. Agreement to sell means when the two parties they are conveying to each other what is to be done. An agreement to sell is when the parties are yet to perform their mutual promises. Let's say the buyer said, I will pay you 500 rupees. The seller says that I will deliver you only this quality of goods. Both of them are yet to perform their promise. It is an agreement to sell. When the seller manufactures and delivers those quality of goods and the buyer pays the 500 rupees, only then it will become absolute, it will become a sale, right? An agreement to sell, the ownership of the goods is with the seller. It is yet to pass to the buyer. It will be passed only after the fulfillment of the certain conditions as agreed upon by the seller and the buyer. In a sale, everything has been done. The ownership has now already passed. The ownership has been transferred from the seller to the buyer. In an agreement to sell, the risk is still with the seller. It will pass on to the buyer only when the sale is completed. In the agreement to sell, if the seller does not deliver the goods have not been delivered to the buyer yet. The buyer cannot demand the delivery. They can only claim the damages. Let's say I placed an order on Amazon. And according to this, it said that in 3 days the goods will be delivered. But it took 4 or 5 days. I cannot demand the delivery. I can only cancel it or I can claim the damages. In a sale, however, if the seller does not deliver the goods, the buyer can file a suit and demand specific performance. I have paid the price, all the conditions have been fulfilled. Still, the seller is not delivering the goods, they're not passing on the possession and ownership. I can file a suit in the court, demand the performance as well as delivery of goods. In an agreement to sell, the seller may not part with the goods until they are paid the price, right? But in a seller, if the buyer does not pay for the goods, now the seller cannot claim back the goods. They can only claim the damages. They can demand the price. If the goods are in transit, then they have the right to stop the delivery, right? Okay. Yes. Then, now when we are talking about conditions in a contract of sale, a condition could be or maybe a stipulation. Condition is the wrong word, stipulation. A stipulation agreed between the buyer and the seller. It could be a condition or it could be a warranty. Condition means something which is necessary for the fulfillment of the contract of sale, which is absolutely necessary. And if the stipulation is not fulfilled, the parties can cancel the contract, repudiate the contract. Warranty is something which is collateral. It cannot cancel. Breach of the warranty will not cancel the contract. So warranty is a stipulation collateral to the main purpose, right? Breach. Breach of warranty leads to claim for damages only. The buyer cannot reject the goods. Condition, however, is essential to the main purpose of the contract. Breach of a condition, the party has the right to treat the contract as cancelled. Okay. The buyer, now the buyer and the seller, they can decide whether the stipulation will be treated as a warranty or a condition. For some of the people, color of a particular product may be a condition. For others, they might just treat it as a warranty. It might not be that important for them, right? So it depends. It is subjective. It varies from one person to another. What you need to remember, when the stipulation is collateral, it is a warranty. Breach of warranty, claim of damages, not rejection of goods. When the stipulation is essential, breach of condition, cancel the contract, refuse the goods, right? Whether it is a contract or it is a whether it is a condition or a warranty depends upon the contract. Now there are certain implied conditions and warranties. whoever is selling the goods. I went to a shop to purchase, I went to a car dealer, and I purchased the car. It is my implied condition. It is my right to believe that the seller had the right to sell. It is my right to believe that the car is not a stolen one, or the seller did not have the right to sell it. This is an implied condition. If, let's say, the car is shown to be of, maybe it is a rare limited edition car, the seller has described to me that it is a limited edition car, it should be a limited edition car. The sale of the goods is by description. Let me also give you some examples along with it. Title, the right to sell, clear. If in the sale of goods by description, there's an implied condition. A sells certain curtains to B by describing them to be of 17th century. Later on, B discovers that the curtains are not of 17th century. A, who was the buyer, can reject the goods, claim back the price. Sale by sample. Again, implied condition. Bulk should correspond with the sample in quality. The buyer has the right, the opportunity to compare the bulk with the sample. A wants to buy rubber material of a certain length and width. B shows a sample to A. A approves the sample, but B delivers the same material with a variation in the length of the rubber. A can reject the goods because the goods did not correspond with the sample in quality. If the sale is by sample as well as description, again, it must correspond not only to the sample but also to the description. There's an implied condition that the buyer has, implied warranty, that the buyer has the right to enjoy quiet possession. If I purchase the car from a seller. Now, the seller cannot come and tell me that no, you cannot take this car out of state, or you cannot take this car off roading. No, I can use the car as per my wish because I purchased it. I have the ownership. Goods should be free from any charge or encumbrance. When I purchase the house and later on I find out that the house has been mortgaged with a creditor, and the creditor comes to claim the house, it is the seller's liability, not the buyer's liability. This means that the buyer can assume that the goods that are being sold would be their absolute property. No one would claim any right over the goods in the future. But very important point, there is no implied condition as per the quality or fitness for a particular purpose until and unless the goods have been described of a particular quality or fitness. It is the duty of the buyer to be beware. This is known as caveat emptor. Caveat means a warning, a caution. The person who buys the goods must keep their eyes open. They should be active and cautious while buying the goods. The buyer must examine the goods thoroughly. Later on, if the goods do not serve their purpose or do not meet their expectation, there is no implied warranty or condition as to the quality or fitness of the good. Okay, so these are the implied conditions: title of the seller, sale by description, sale by sample, fitness for the purpose. These are implied condition. Breach of any of this can lead to cancellation of the contract. Warranties warranties means that breach of the warranty can lead to claim for damages only, not cancellation. Like sample and description, mercantile quality, implied warranty. Caveat emptor, it has been asked so many times in the exam. There is no implied warranty or condition as to the quality or fitness except under specific reliance on the seller. Whenever I'm buying any goods, it is my responsibility to be aware, to check the goods before I pay the price and take the delivery. Right? So these are the conditions and warranties. Next, what are the rights of an unpaid seller? What is the meaning of an unpaid seller? When the whole of the price or part of the price has not been paid, or let's say when the price was to be paid in the future on credit, or maybe a check was given and the check has bounced or the check has been dishonored, then the seller will be known as a unpaid seller. Unpaid seller. Okay. So payment has been dishonored, the payment has not been paid. What are the rights of the unpaid seller? Unpaid seller has certain rights against the goods where the property in the goods have passed. They have delivered it to the buyer, right? Or maybe ownership has been passed to the buyer. Ownership has been passed to the buyer. If the goods are still in the possession of the seller, they can exercise a lien over it, retain it. If let's say the goods are in transit, they have been delivered to a carrier, they can call the carrier and they can tell them stop the delivery, stoppage in transit. Resale, if the goods are of perishable nature, even if they're not, the notice has been given to the buyer. After giving a proper notice, they can resell the good to a third party when the property in the goods have not yet passed, both withholding in transit as well as stoppage. What are the rights against the buyer personally? The seller can file a suit in the court for the price. They can also file a suit for damage. Let's say the goods were of perishable nature. I'm a grocery seller. I delivered some goods. I agreed to deliver some goods to you, but you did not pay the price to me. Because of that, the groceries went bad. They were perishable. I had to bear the loss. I can file a suit in the court to recover the damages. Repudiation, I can cancel the contract. If you do not pay me, I can cancel the contract. And I can also file a suit for interest, not just the principal, but also for interest. Okay. So what are the physical remedies? What is the meaning of lien versus stoppage in transit? If let's say the goods are with the seller warehouse, the goods are kept in the warehouse, they're not yet in transit or they're not yet delivered. So the seller has the right to retain possession until paid if sold without credit or the buyer has become insolvent. Okay. And even if part delivery has been made, the remaining goods with the seller, they can keep it with them. They can exercise lien. Stoppage in transit, the goods are with a carrier and the seller gets the knowledge that the buyer has become insolvent, they're not going to pay, they can stop the transit. They can take actual possession or give notice to the carrier to keep the goods with yourself until and unless further notice is given, right? However, if the buyer gets the possession, then the transit ends and the buyer takes delivery. In this case, they can only file a suit for the recovery of damages or for the payment of price. Then they cannot exercise lien. Lien and stoppage in transit when the goods have not yet reached the buyer. They are either with the seller or with the carrier. They are in transit. Then lien or stoppage can be exercised. All right. Then when will the unpaid seller lose their right of lien? When they deliver the goods to a carrier, then they cannot exercise lien, they can only exercise stoppage in transit. When the buyer or their agent obtains possession, then also they cannot use the power of lien by an explicit waiver. If let's say the seller clearly mentioned in the contract that I'm not going to use the right of lien, they have explicitly waived their right, then also they'll lose it. What is the effect of sub sale or pledge? Let's say the buyer took the goods, they sold it off to a third person or they pledged the goods to a third person, and now they're telling the seller, I don't have the goods, what can I do? This will not affect the seller's right. The seller still has the right to file a suit, claim the damages from the court, from the buyer, if it is done without the permission of the seller. All right. Third party will have the right. The third party will have the right on the goods if they take the documents in good faith. But the seller will still recover the price from the original buyer. Okay. Unpaid seller can sell the goods if they are perishable. Right? Now, There's another very important point here, that effect of subpledge or sell by the seller. Let's say I decide to sell the goods to a third party because the original buyer was not paying me the price. If I have given the notice, if I exercise the right of sale after giving notice to the buyer, the original buyer, and any shortfall happens, if there's a deficit in the price, I have the right to recover it from the original buyer. If the original agreed upon price of the goods was 5,000 rupees, but due to the buyer become insolvent, I had to sell it at 2,000. I had given the notice to the original buyer before the sale. I can recover the remaining 3,000 from the original buyer, right? If, however, I did not give the notice to the buyer before the sale and then any deficit happens, then I cannot recover it from the buyer, right? Giving the notice, the seller can recover from the original buyer damages for any consequential loss due to the breach of the contract. And then if there is any surplus, the buyer is not entitled to any profit. If the unpaid seller, however, does not give a prior notice, then the seller is not entitled to recover damages from the buyer. On the contrary, if there's a profit on the resale, the buyer becomes entitled to the profit. So it is beneficial for the unpaid seller to give a notice to the buyer before they exercise the resale. Clear, everyone? With this, we have completed the contract of sale, the sale of goods act. Clear? Everyone who's present here, kindly like the video and be active. If you want me to ask it, if you want to ask me anything, if you want me to repeat a topic, do let me know. All right? Everyone who is present here, like the video and like the session. If you have any queries, then do ask. Next. Now we are starting with the unit 27. That is the Partnership Act. The definition, meaning, nature of a partnership. So the Partnership Act of 1932, the important provisions, what are the relations of partner to one another, what are the rights and duties of a partner, what are the duties towards a partnership firm. So partnership is the relation between two or more persons who have agreed to share the profits of a business which is being carried on by them, or maybe a few of them on behalf for all. So persons who have entered into a partnership with one another, they are individually called partners, and collectively it is called a partnership firm. There's a proper name that is given to the partnership firm, right? So the relations under the partnership, they arise from a contract, not from the status. For example, if a Hindu undivided family or a Burmese Buddhist husband and wife, they are carrying on a business, family business, they are not partners. Partners who have, only those who have agreed to run a business, to conduct a business and share the profit. So, partnership is something which is a contract for a lawful business for profit sharing and mutual agency. Collectively, they are known as the firm, the partnership firm. Partnership, however, is not a separate legal entity. What is the meaning of this? We'll be seeing further. So, essential characteristics of a partnership, there's an agreement which could be express or it could be implied, never arising from the inheritance or law, right? Persons minimum 2, maximum 100. Who can form a partnership? Minimum 2, maximum 100. Two firms cannot be a partner. ABC firm cannot be a partner of XYZ firm, but the individual partners of both the firms can come together to form another firm. LMN. Okay. The business must be legal, a trade or occupation or a profession. The core motive is to generate and share profit, and it is an extension of the contract of agency because the partners are acting as agents for one another. Sharing of profits is essential, but the partners can contract out of sharing the losses, right? Any person who is denied a share in the profit is not a partner in the partnership firm. Now, partnership can be of three types. Partnership at will. It means there's no fixed tenor or a fixed purpose for which the persons have come together. It is at will, right? A partnership at will can be dissolved by any partner by giving a due notice in writing to all the other partners that they are intending to dissolve the firm. Then the firm gets dissolved as per the date mentioned. Partnership for a fixed period is, however, for a tenure. Let's say three friends came together to run a new business for 1 year. So once the 1 year period is over, the partnership will come to an end. However, if the partners they want, they can continue to carry on the business after the fixed period as well. Now, the mutual rights and liabilities will remain absolutely unaffected, and the partnership will be automatically transformed into a partnership at will. Particular partnership is for a particular job or assignment. Once the assignment is over, the partnership will come to an end, right? So these are the three types of partnership. Okay. Next, we have what are the relations of partners to one another. The general duty of partner is that there's a term which is known as uberime fidei. Uberime fidei. It means that the partners are bound to carry on the business of the firm to the greatest common advantage. They are bound to be just and faithful to each other. They need to render true accounts, full information on all things which are affecting the firm or the partner. Act in good faith. They should be just and they should not try to cause any harm. Every partner also has the duty to indemnify all the other partners for any loss which is caused by them due to a fraud. It is an absolute duty. No partner can contract themselves out of the agreement. It is the absolute duty. If, for example, a partner commits a fraud upon a customer of the partnership firm, the firm is liable, right? The firm is held liable. Then the partnership firm can recover from that particular partner who caused the damages, right? The partner cannot contract out from indemnifying the other partners and the firm for a fraud that they conducted. This is non negotiable. Then there are certain contracts which are certain duties or rights which are entered due to mutual agreement. Like some of the partners may be given the right to take to get remuneration or salary or business, right? Some of the partners may be given the right to sign on behalf, but there are others who are other rights and duties which are given to all the partners, like take part in the business unless the person is a dormant partner or a sleeping partner. Every partner has the right to inspect, access, copy the firm book. The ordinary matters are decided by majority rule. However, if the change is to be in a change in the business to be conducted or a new business is to be added, then it requires 100% unanimous consent. Financial baselines, no remuneration is given to the partner. They will only share the profits equally, losses contributed equally. Interest on capital is paid only out of the profit. 6% interest applies to extra amount, right? So, this is as per the Partnership Act. If the partners want, as per the mutual agreement, they can increase or decrease, they can give some rights to the partners, they can take away some rights from some of the partners. Okay, now fiduciary boundaries. There are certain things that are done by the partners only with the consent of the firm as well as all the other partners, like property. Whenever a property is bought by a partner, it should be in the name of the firm. or the property which is acquired from the partnership is in the name of the firm must be held and used exclusively for business purposes only, not for personal gains by any of the partner. All right. There should be no secret profit. There should be no secret profit. If a partner derives personal profit from using the firm's uh, goods or maybe firm's account or using the firm's name, they must pay it to the firm. They cannot get any personal gain. And no partner is allowed to conduct a business which is competing with the partnership firm, right? Profits made from running a competing business must be surrendered to the firm. There is mutual agency. All the partners are mutually liable to all the other partners. So one partner acts as an agent for all the other partners, and one partner is also the principal for all the other partners. And all of them are mutually agents of the firm, right? A partner can bind the firm and all the other partners by the acts that are done in the ordinary course of business and in the name of the firm. The only way to make the act binding for the firm and other partners is to do it on the behalf of the firm and in the ordinary course of business. The principal, every partner is also a principal of every other partner in the firm. So everyone is an agent, everyone is a partner in a partnership firm. But all the acts should be done in the firm's name. If it is done in the personal name, then no other partner or the firm will be liable. Then, what are the partners' authorities? There are implied authority. It is understood that every partner has the authority to purchase or sell stock in trade. Here we have taken example of a grocery firm. So every partner in the grocery firm, they have the right to purchase and sell the stock in trade on behalf of the firm. They can engage servants, receive debt repayment, borrow money, draw or endorse negotiable instrument, pledge the goods, employ a defense lawyer. Any partner can do this on behalf of the firm. There is implied authority. However, only some partners will be given the express authority to open a bank account on behalf of the firm, transfer immovable property on behalf of the firm, withdraw a lawsuit, admit a liability, submit a dispute, enter into a new partnership, right? So, implied authority, powers that are given to all the partners, it is understood. Express or non-implied, where agreement should be there. Specific authorities are given. For example, there's the ABC Grocery. A firm ABC and Company is in business of selling groceries, and partner A is an agent. If the partner A enters an agreement with X to supply car spare parts in the firm's name, obtaining an advance of 50 lakh rupees without authority, then the firm and the other partners are not liable. Why? Because it was completely outside the absolute business of the firm. And this partner A had no right, no authority to supply car spare parts. The name of the firm says ABC Grocery, right? So, to bind a firm, the act must be done in the firm's name and it must relate to the firm's ordinary normal business. Car parts, they fall outside the scope of the grocery business. So here the third party who entered into the contract with this unauthorized partner will be liable. They cannot sue the firm for any liability. All right. So that is the partnership firm. That is the partnership firm. There's also the limited liability partnership, which is also a separate entity. Partnership firm is not a separate entity. It is whatever the partners make it. LLP, as per the LLP Act of 2008, is a separate entity. The members are different, the owners are different, right? Partner liability in a partnership firm is 100%. They have unlimited liability. But in a LLP, it is limited liability, limited by shares, limited by guarantee, right? Agency. Every partner in a firm is an agent. But They are an agent of the LLP only. They're not an agent of all the other partners. In a partnership firm, every partner is also an agent of all the other partners. In a LLP, it requires minimum two partners and two designated partners. Designated partners are those who will carry on the main business, who are responsible for signing the document, the paperwork. Okay, central government will investigate the LLP. Winding up can be done via the NCLT. You have studied about the IBC code in your module C, the NCLT, DRT, whatever rights are there. Okay, so that is there. Then what is the difference between a traditional partnership and the LLP? The partnership is governed by the Indian Partnership Act, limited liability by the LLP Act of 2008. Partnership firm is not a separate legal entity. It is not separate from the partners. If a partnership is dissolved, the partnership firm will also dissolve. But LLP is body corporate. It has perpetual succession. Even if all the partners change, the LLP will still continue. The liability of all the partners in a partnership firm is unlimited, joint. In a LLP, it is limited to the agreed contribution. The partners are shielded, protected from the other partner's misconduct. In a partnership firm, there's mutual agency. Every partner is an agent of the firm and all the other partners. In the LLP, the partners are the agent of the LLP only, not the other firms. In a traditional partnership, maximum 100 members can be there, but in a LLP, minimum 2 is required, right? But there is no maximum limit specified. All right. So this is about the partnership, how the partnership firm works. Okay. Then what are the now we'll be talking about the relations of partners to third parties. Third parties. Implied authority, emergency, burden of wrongful act. If, let's say, any partner does something which is not as per their express authority, but it is to protect the firm from any loss. In the example of the grocery, ABC groceries, what happened was there was a partner A who had the responsibility of only buying the stock. B had the responsibility of selling it. A bought the stock, but B was absent. B was not well, or they were temporary, unable to perform their act. And keeping the groceries beyond the certain time will lead to loss. So, A, acting in good faith to prevent any loss to the firm, they sold the goods. In this case, A will be protected. Okay. Then rights can be transferred. Okay, shares, if it is a it is a partnership firm which has declared shares, it can be transferred, but particular authorities cannot be transferred. Reconstitution of the partnership on retirement, insolvency, structural changes, dissolution and registration as per the partnership act is done. Okay, so implied authority acts which are done on behalf of the firm, the contract between the partners to extend or restrict authority can be there. Third party shield, the firm is bound by a partners act unless the third party explicitly knows about the secret restriction. If, let's say, due to the conduct of any partner, some loss is caused to a third party, the firm is responsible to the third party, but then they can recover it from the partner because of whom the loss was caused. Then a partner has the authority to act to protect the firm from any loss when it is done in the ordinary course of business. We took the example case study, the Kolkata fruit consignment. Consignment arrives in Kolkata for a Chennai based firm. Fruit is perishable, won't survive the journey from Kolkata to Chennai. So the partner sells the fruit locally. Because of this, the price was low. But the partner is protected, not liable for the price difference. The firm is bound by emergency sale. All right. But to get this protection, the partner should execute the documents explicitly binding the firm. All the documents should be signed for and behalf of the firm. Only then the firm will assume the liability, otherwise not. Right? Then there's the doctrine of holding out, which is again very important. What is the doctrine of holding out? It means that if a person, by any manner, expressly or maybe written, they represent himself or they permit himself to be represented to be a partner in the firm. In reality, they are not a partner. And because of this, some third party was induced to pay money to the partnership firm, and the partnership firm, it ran away with the money. So this person who represented themselves to be a partner in the firm will be equally liable. So let's say I'm an educator and I see that a board of a particular education firm, they have my photograph on it. And seeing this, many students, they pay tuition fees to the firm. Okay, I know this, that I'm not a partner. My photograph is wrongly represented there, but I did not take my name back. And then that education firm ran away with the money of the public. The public has the right, the court will take action against me also. So a person who is not at all a partner in a firm, they permit to be represented as a partner and induces others to give credit to the firm, then such a partner is known as a partner holding out. Such a stranger will be equally, individually, personally liable for the debts of the firm. Okay. Then what about a misconduct? If a partner does some wrongful act because of which loss or injury is caused to a third party, for example, a managing agent negligently leaves a mine shaft unguarded. Because of that, a workman falls. The firm is liable to pay for the hospital bills and injuries of the workman. It is a wrongful act. Misapplication. If a partner misapplies third party money without apparent authority, a partner at a banking firm disposes of the customer's security held for safe custody. The firm is responsible to the third party, to the customer. They can later on recover it from the fraudulent partner. They can later on recover it from the fraudulent partner. There are restrictions on a transferee power, right? I am a partner in the firm. I have also received some beneficial shares. I can transfer it to another person. So the transferee, I am the transferor. The person receiving the rights is the transferee. The transferee has the right to receive the share of profits, accept the accounts of profit, and on dissolution receive a share of the firm. However, the transferee cannot interfere in the conduct of the business without express consent, and they cannot demand ongoing access to the firm's account. So someone who has been transferred some beneficial rights, they cannot interfere in the working of the firm. They cannot get access to the firm's account. They can only get a profit. They have been only transferred the profit. Okay. Then again, very important concept, minor. What happens when a minor is admitted to the benefit of a partnership? As per the Indian Contract Act, a minor is not competent to enter into a valid contract. They are not eligible to enter into a contract of partnership. But if a person who is a minor, they can be entered into the profits. They can be given a share in the profit. But they cannot be personally liable for the acts of the firm. Only the minor's share in the partnership will be liable. All the other partners are personally liable, but a minor is not personally liable. A minor is not personally liable, just that the share of the minor will be liable. Okay, so a minor has a right to share the property and profits of the firm. They are not personally liable for the liabilities of the firm. The minor may or may not take legal action for the payment of the share of the property or profits of the firm, right? What is the important point here? When the minor becomes a major, when they attain the age of 18, They have 6 months time. At any time within the 6 month of attaining majority, the minor has to give a public notice whether they want to continue as a full-time partner of the firm or not. So if they give a notice and they elect to be a partner, then now the minor will become a proper partner, and they will now be personally liable for all the acts of the firm after attaining majority. Okay, after attaining majority, the profit and property share remains the same. Now the minor becomes personally liable after giving the notice. If, however, the minor fails to give a notice within the 6 month public notice window, then also they will automatically become a partner in the firm, personally liable for all the acts done by the firm after attaining majority. What if the minor gave a notice and they elect not to become a partner? They do not want to become a partner. Then the rights and liabilities remain those of a minor up to the date of public notice. Now the share is not liable for the firm acts which are done after the notice date, and the minor, they can sue the partners for the share and leave the partnership. Okay, so remember this 6 month public notice window. Within 6 months of attaining majority, the minor has to give a public notice. If they give a notice to be elected as a partner, they become personally liable for the future acts of the firm. Or if they fail to give the notice, then also they become personally liable. If they give the notice not to become a partner, then only up to the giving of the notice, the minor rights and liabilities will be there. Then what else? The retirement of a partner. A partner may retire from the firm with the consent of all the other partners, or as per the express agreement by the partners. If the partnership is at will, then by giving notice in writing to all the other partners. The retiring partner and the other partners will be liable to the third parties, right? Until the public notice is given. Even a retiring partner is required to give a public notice. Until they give the public notice, they will remain responsible to the third parties. Even though they give a public notice, they will still be liable for the acts that were done before their retirement. After their retirement, now the retiring partners will not be liable for any acts of the firm, right? Insolvency. If a partner of a firm is adjudicated as insolvent, then also that person ceases to be a partner from the date on which the order of adjudication is made, right? It may or may not dissolve the firm. If the firm is not dissolved, then the estate of a partner is not liable for any acts of the firm. The firm is not liable for any act of the insolvent which is done after the date on which the order of adjudication as insolvent is given. All right. So that is the retirement. Then we have the dissolution of a firm and dissolution of a partnership. Dissolution of the firm means when all the partners leave the firm will be shut down. The firm will be liquidated, the firm will be dissolved. However, let's say there are five partners, three of them leave, two still continue to run the business. Then it will be only a dissolution of the partnership and the firm will continue. So there's a distinction between a dissolution of a firm and dissolution of a partnership. Dissolution of a firm means breakdown in the relationship between all the partners in the firm. But if there's a breakdown of relationship between a few, not all partners, it will allow the remaining partners to reconstitute the firm. It is called the reconstitution or dissolution of the partnership. Okay, so the dissolution could be by agreement or the dissolution could be compulsory dissolution. If let's say it was a partnership at will, then on will it can be dissolved, or it was for a particular period or a particular purpose, on the accomplishment it can be dissolved. If, however, compulsory dissolution, if all partners are adjudicated insolvent, or any event which makes it unlawful for the business to be carried on, then also the partnership will be compulsorily dissolved. Let's say ABC firm was involved, a partnership firm was involved in two businesses. One, selling of a particular type of medicines. Second, selling of clothes. The selling of this particular type of business has been declared as illegal by the government, then just this business will be shut down. Selling of clothes will still continue. The firm can continue to carry on its lawful adventures and undertakings. Then happening of certain contingencies. If the partnership is constituted for a fixed term, then the expiry of the term. To carry on one or more business, then the completion of the business. By the death of a partner or by the adjudication of a partner as insolvent, then also the firm can be dissolved. Okay. Then dissolution by the court. When can a court dissolve a firm? When a partner has become of unsound mind, the partner has become permanently incapable of performing their duties as a partner, the partner is guilty of conduct which is affecting the carrying on business, the partner willfully commits breach of agreement in relation to the management of the affairs, the partner has transferred all the interest in the firm to a third party, the business of the firm cannot be carried on except at a loss, and on any other ground wherever the court feels that it is necessary, just and equitable, the court can order the dissolution of the partnership firm. So these are the reasons, the grounds for dissolution by the court. Okay. What else? What are the liabilities? What are the liabilities for the acts of the partners done after dissolution? Now, any, all of the partners, they must give a public notice to the effect that the firm is now dissolved. Because even after the dissolution, the partners may still be continue to be liable to the third parties for any act done by them. Or the public might not know that the firm has been dissolved. They may continue to enter into agreement with them for the remaining partners or maybe insolvent partners. That is why whenever a firm is dissolved, a public notice is given. After the public notice, the firm is not liable. But if there is any obligation which is pending, the firm and the partners will still be liable. The firm and the partners will still be liable till they fulfill the obligation. Okay. Then the last topic of this unit is the effect of non-registration. Section 69 is very important. No suit to enforce a right arising from a contract can be instituted in any court if the firm is not registered. So, the partners may or may not enter into a partnership deed. They may decide to have an oral partnership, right? Even if the partnership deed is entered, they may decide not to register it. However, non registration will cast certain disability on a partnership firm, right? If it is not registered with the registrar of partnership. This is the section 69. So no suit can be filed against a third party by the partnership firm if the firm is not registered. Similarly, any third party also cannot file a suit against the partnership firm in a court if the firm is not registered. Okay? If it is not registered. However, there are certain exceptions. Doesn't matter whether the partnership firm is registered or unregistered. They have the right to sue for the dissolution of the firm and account. They have the right to realize the property on a dissolved firm, and suits or set off not exceeding 100 rupees. So these are exception, doesn't matter whether registered or not, and these ones on the red color, these can be done only when the firm is registered with the registrar of partnership and done. With this we have completed the partnership act as well. Everyone who's present, tell me, any doubts, any queries, any questions? If you have any questions from the Partnership Act, then you can ask. Otherwise, we'll start with the most important unit of the module D, unit 28, the Companies Act. From this Company Act, minimum 10 to 15 mark questions will be asked, and these questions are very much doable, easily scoring. So, are we ready? Are we ready to start with the Companies Act? Very important. Clear your mind. With a fresh mind, let us start. Now, when we are talking about the Companies Act, earlier we had the Companies Act of 1956. Now we have the amended Companies Act of 2013. Okay. So, company, any entity, separate legal entity, which is registered, incorporated as per the Companies Act, is a company. Okay, either 1956 Act or the 2013 Act. So, a company which is formed as per these acts will be a company. Okay, if a company was registered as per the 1956 Act, they do not require re-registration. However, remember, registration is compulsory for a company. Registration was not compulsory for a partnership firm, but registration is compulsory for a company. What are the features? A company is compulsorily registered as per the 1956 Act or the 2013 Act. It is an artificial legal person. A company is an artificial legal person separate from its members. A partnership firm is not an artificial legal person. It is not separate from its partners. Company is created by law. It can be dissolved only by the law. It is invisible, intangible, exists only in the eyes of the law, and it enjoys many rights that a natural person has, like acquiring property, disposing property, entering into contracts, filing suit, being sued against. But it is not a citizen. A company might have a domicile, a residential status even. For example, if a company is incorporated as per the Companies Act of India, it has a residential status. It is required to pay taxes to the Indian government, but it has no citizenship. Or the provisions of the Constitution also do not apply to a company, right? So a company has a nationality, it has a domicile, but it has no citizenship. A company has an independent corporate personality, distinct legal personality from its members, from its shareholders, from its owners. A company is created with limited liability. Partnership has unlimited liability, company is created by limited liability. It has perpetual succession. Even if all the members, even if all the shareholders they change, the company will still continue with the same name, with the same memorandum, whatever. Members may come, members may go, but the company goes on forever and forever unless wound up by a proper law, right? Transfer of shares is allowed. The shares in a company are transferable as per the articles of association. Company is an artificial legal person. It can enter into contract in its own name, but how will an artificial legal person sign the document? So a company can have a common seal. As per the 1956 Act, having a common seal was compulsory. But now 2013 Act says that common seal is optional. All the documents which require a fixing of the common seal can now be signed by two directors or one director and the company secretary. Either, okay, either use a common seal or it can be signed by two directors plus or one director and a company secretary. Okay, then corporate wheel is very important. The people wheel or a curtain, people who are in front of the curtain and people who are behind the curtain, people who are the shareholders, owner of the company, they're different from the people who are actually managing or running the company. Okay, If let's say there's a fraud, any illegal act or siphoning of funds which is done by the company, the court will have to identify who was responsible. So to know who are the people actually working behind the company, carrying on the activities of the company, the court will pierce the veil. They will lift off the curtain. The courts, they ignore the separate entity. They hold the members and the directors responsible when the company is doing something illegal. Okay, so the people behind and the people in front of the curtain are different. Front of the curtain are the shareholders and the members, right? Behind the curtain are people who are carrying on the business of the company. So I hope the difference between a company and a partnership is clear. Registration of a company is compulsory, it is optional in a partnership. Company is separate from its members. In a partnership, no separate existence. The partners and the partnership are the same. Liability of a company limited to shareholding. Partnership, unlimited liability to all the partners. Perpetual existence is there in the company, unaffected by the death of the members. In a partnership, death of the partner dissolves the partnership. In a company, in a private company, 200 members can be there. When we are talking about a private company, 200 members can be there. In a public company, unlimited can be there. In a partnership, maximum 100. In a minimum, if we are talking about a minimum, a company can be a one person company also, but in a partnership there should be minimum two partners. Free transferability in a company. In a partnership requires consent of all partners. In a company, members are not agent of each other, but in a partnership, members are mutually liable to each other. Okay, then if we talk about the types of companies, company could be a statutory company as per the Companies Act, right? It could be created as per the Companies Act, or maybe as per RBI is a company, SBI is a company, all the nationalized banks are a company. So as per the particular act, when it is created, it is a statutory company, right? Or if it is under the Companies Act, it is a registered company. Company, as per the liability, could be limited by shares, guarantee, or unlimited. Limited by shares, when it is a company limited by shares. In such companies, the share capital is there, right? Divided into a certain number of shares. And when the company is dissolved or any other thing happens, the member is not bound to pay anything more than the fixed amount, whatever it may be, or the liability of the members is limited to the extent of the unpaid amount on the shares. Limited by guarantee. When the member promises to pay a fixed sum, then they will be liable to pay only the fixed sum in the case of winding up. Company with unlimited liability, every member is liable without any limit. So that makes it similar to a partnership. Other than that, a company according to public interest could be private, public, government, foreign, one person company, or a small company. Private company has maximum 200 members. Public invitation of shares is not allowed. And there's a benefit. A private company has a benefit as compared to the public company. Like they need not obtain a certificate of commencement from the registrar. A public company has to obtain it. A private company need not hold any statutory meeting or submit a statutory report to the registrar. Public company is required to do so. Um, Remuneration payable to the directors, annual general meeting. There are certain restrictions on public companies which are not there in the private company. Public companies should have minimum seven numbers and no maximum. Shares are openly listed and liquid, transferable, can be sold and bought in the secondary market. Government companies where the 51% paid up capital is held by the central or the state government, like BHEL, SAIL, GAIL, these are all government company. Foreign company which is incorporated outside India, conducts its business, it has a place of business in India through physical branch or electronic mode. One person company when there is only one member, and that member will also nominate a successor, right? A one person company, very important, is required to convert itself. A one person company, if the share capital exceeds 50 lakh rupees or its average annual turnover exceeds 2 crore rupees. Okay, these are the types of companies, the different types of companies. Then we have two very important public documents that each company needs to prepare and publish. That is the Memorandum of Association and the Article of Association. The very first step in the formation of the company is the preparation of MOA, right? MOA will include the name clause. Company is a legal person, it will have a name to be identified. A company cannot have a name which is, in the opinion of central government, undesirable or it resembles another company's name. Then, if it is having limited liability, then the term limited or private limited will be used accordingly. The company has a register, the memorandum has a registered office clause. The state which will have the registered office where all communications and notices must be addressed. If the company wants to change its registered office, shift it, they have to give a notice of not less than 30 days to the ROC. Objective clause, what business will be carried on by the company, the main objective and the other objectives. Company can have any lawful business. Beyond that, beyond the lawful business which is mentioned in the memorandum, the company cannot do anything. It is known as ultra vires. Liability, whether the members have limited liability or unlimited liability, whether the liability is limited to shares or guarantee or both. And the association or subscription, members who have subscribed their signatures for becoming a member with the company. So that is the subscription clause. How will persons become a member? Okay, that is the memorandum of association, which tells the outsiders the details about the company. Then we have the articles of association, which is the second important document. The internal management, internal regulations, articles that provide how the objectives will be carried out or how the contracts will be signed, entrenchment, holding property, disposing property, what rules and regulations will be formed. All right, remember, the MOA is the primary document and the AOA is subordinate. If there is any um miscalculation, or let's say there's any difference between MOA and AOA, then the MOA will be held dominant. It has the dominant status, defines the fundamental activities, and if any change has to be made in the MOA, it requires a special resolution and central government approval. Let's say the objective has to be changed or the registered office has to be changed. Then it requires a special resolution plus central government's approval. Acts which are done beyond MOA are void. They cannot be ratified by the company. They're ultra vires. Articles of association is a subordinate instrument. Internal procedures and management. It is basically for the internal people, the directors and members. If any change has to be made in the AOA, special resolution, that is all. Government approval is not required. Any act which is done beyond AOA is just a procedural irregularity and it can be ratified by the shareholders. It can be corrected. Okay. So this is the difference between the MOA and the AOA. Now, how to become a member in a company? A person can become a member by subscribing to the MOA. When the company is formed, they will sign the memorandum, they will automatically become a member. Such members who subscribe to the memorandum, they cannot cancel or rescind the contract even if later on found that the promoter of the company conducted a fraud. right? Another way to become a member is allotment of shares, another transfer of shares, transmission, joint holding, acquisitions, allowing one's name on the register without agreement, holding out, and depository, entered as a beneficial owner in the digital depository records. Joint members. People can jointly hold shares in a company. The person whose name appears first in the joint holding will be the primary member. All the communications and notices will be sent to that person. Now, what is the effect of the MOA and AOA? Both of these are public documents. Any third party who is entering into a contract with the company will be expected, they will be deemed to have not only read the documents but also understood each and everything which is written in the document. Later on, they cannot claim that, oh, I did not understand the document or I had no knowledge about it. Okay, so this is a very important point, right? Now, we have certain doctrines, the doctrines of ultra vires. Anything which is given in the MOA, memorandum, anything which is done by the company as per the MOA are within the powers of the company, they are intra vires. But anything which is done outside the MOA are ultra vires beyond the powers of the company and they are void ab initio. For example, if the company is a grocery company, buying and selling of groceries in the market, right? This is the main objective. If a third party enters into a contract with the company for selling car spare parts, it is beyond the powers, ultra wires. The third party, they cannot later on claim or file a suit against the company. So any act outside the MOA is entirely void from the beginning, void ab initio. A company cannot be sued upon, it cannot be ratified even by unanimous shareholder consent. So the doctrine of ultra vires protects the company, the internal persons, members of the company from outsiders. So the company is not liable. If a company, some of the members, they took a debt beyond the powers of the MOA, ultra vires transaction, the company is not liable for the debt. The lender, however, there's a doctrine of tracing. The lender, without having read the MOA, entered into a contract with one of the members of the company and gave a loan beyond what was allowed as per the MOA. Now, the lender cannot proceed against the company in case of default because it was void ab initio. But there's the doctrine of tracing. If the borrowed funds are used to purchase an asset, the lender can trace and claim the specific asset. Okay, they can claim the ownership of the wrongly acquired property, but they cannot file any suit against the company, right? Breach of authority by the director leads to personal liability, criminal fraud, personal liability. The company is not liable. Okay, so the MOA and AOA are public documents. Outsiders are legally presumed to have read and understood. You cannot claim ignorance of the company's stated public rules, right? This is the doctrine of constructive notice, right? Constructive notice. However, if a third party has read and understood both the document, let's say the MOA says that the company will sell groceries worth rupees 50,000. Okay, this is the main objective. The AOA says that any contract for selling groceries more than or maybe 50,000 rupees will be signed by at least two directors. You entered a contract, you saw that the two directors have signed it and the worth is 50,000. It is a contract which is valid. Later on, the company claimed that these two persons who had signed the contract as directors were not authorized. Now, this will protect the outsiders. This is the doctrine of indoor management. So the doctrine of constructive notice, shield for the insiders. The insiders are protected from the outsiders, third party. Exception to the constructive notice, if your contract aligns with the public document, you can assume that the internal approvals were handled properly, right? That is, it is not your fault if the directors were not authorized. You acted as per the public document. So this is the doctrine of indoor management. Remember, doctrine of constructive notice protects the insiders. Doctrine of indoor management protects the outsiders from any internal mismanagement. However, if you were well aware of the internal management, if it is in the newspaper or in the media, still you entered into a contract, then you will be liable, right? Okay. Then, um, yes, so that is all about the doctrines of constructive notice, ultra vires, and indoor management. We have studied about the members of the company who all can become a who is a member of the company, the various ways of becoming a member of the company. Members are the owners. They have competency, rights, liabilities, statutory registers are prepared, foreign shareholders, debenture holders, and so on. Prospectus. If a company wants to call public investors, they want to raise share capital by issuing shares in the public. That is done by a prospectus. And directors are the actual people behind the management, right? Who all can become a member of the company? Competent individuals who are competent to contract. Minors and unsound mind people cannot become members. Organizations, a company or an LLP can become a member of another company if allowed by their MOA. However, partnership cannot become a member of the company because they are not a legal person. One partner can purchase share of the other company individually, but the partnership firm cannot. Trade unions are allowed, non-residents are not allowed. They will be allowed only when the FEMA guidelines are complied with. Insolvent persons are allowed, right? If a person was a member, they become insolvent, their votes will be retained, okay? And fictitious persons are not allowed. If any person takes a illegal identity and then they become a member, such a person will be punishable with a imprisonment of up to 5 years, 5 years imprisonment. What can lead to end of the membership? Voluntary action. If you completely transfer your shares to another person, if you surrender your shares or rescind the contract due to misrepresentation of the prospectus. Involuntary events, the company had issued the shares but they have cancelled the prospectus, or the sale has been done pursuant to a court decree, the court has ordered the dissolution, the member is adjudicated insolvent by any court, and the death of the member. Corporate action, when the shares that were issued were redeemable preference shares and they are redeemed, or the company is wound up, right? The member will remain liable as a contributor. They are entitled to the surplus shares assets, but now they will no longer be a member. Then registers have to be maintained of all the members. The information that has to be included in the registers: name, address, and occupation of the members, the shares held, amount of shares, value of the shares held by each member, and when did they become a member, when did they ended their relationship. Foreign registers have to be maintained if authorized by the articles to get foreign membership also. Operational threshold: maximum for 45 days in a year by giving 30 days closure notice. 30 days at a time, maximum 45 days, the register can be closed. And for closing the register, that is no longer a member is being accepted, minimum 7 days notice is required to be published in a local newspaper. Compliance failure: if the company fails to maintain the register, fails to update the register, then penalty of 3 lakh rupees, and every defaulting officer will also be liable to a penalty of 50,000 rupees. Then what are the rights of the members? There are certain statutory rights which cannot be taken away by any of the members, like priority to get new shares, receive the meeting notices, voting right. They have the right to transfer shares, receive annual accounts. They can apply to the NCLT or call an annual general meeting for the investigation of affairs. They have some proprietary rights like receiving dividends. If any dividends are declared or approved, they have the right to receive it. Liabilities, what are the liabilities of the company? Depends. If the company has been formed with unlimited liability, all the members will be completely, fully liable. Limited by guarantee, whatever they have promised, only that amount they'll have to pay. Limited by shares, they will be liable only for the unpaid nominal value of the shares held. Okay. What is a prospectus? Now, the meaning of the prospectus, it is a public document when a company wants to invite offers from the public for subscription or purchase of any security. Then, when they're proposing to make an offer, they may issue a red herring prospectus. It is a preliminary prospectus prior to the issue of the final. Red herring, it will be filed with the registrar at least 3 days prior to the opening of the subscription list. The red herring prospectus will carry the same obligations that are applicable in the final prospectus. Any variance should not be there. Upon the closing of the offer or securities, whatever capital is raised at the closing price which is decided will be filed with the registrar as well as the SEBI, right? Okay. The red herring prospectus will not include the complete details, and the prospectus will include the complete details. It is very clear, I know, that private companies cannot issue a prospectus to raise funds from the public. It is prohibited. It is prohibited. What is a shelf prospectus? Securities which are issued in one or more stages of a certain period. You prepare a prospectus and you keep it in the shelf. Every time a new prospectus need not be created, need not be registered with the ROC. Created, registered, kept in the shelf for various stages, for various issues. Okay. Then compliance should be there. A prospectus should be issued only after the incorporation of the company. The mandatory provisions have to be stated. It must be dated. Prospectus must be signed by every person who is a director. Every application must be accompanied by a copy of the prospectus. Application form for shares must be accompanied by a copy of the prospectus so that the members, the people interested can know what are the main purpose of the company. There should be statements by expert in the prospectus, right? And these experts should be independent. If anything wrong is found, any misstatement is found, the experts will also be liable. And before the issue of the prospectus, it must be delivered to the ROC for registration along with the documents and the consent of the expert. And once registered, it has to be issued within 90 days. No prospectus will be valid if it is issued more than 90 days after the date on which a copy is delivered to the registrar. Right? Within 90 days, it has to be issued. What if there's a misstatement? A person who has been, let's say, I was induced to subscribe for the shares or debentures on the faith of a statement in the prospectus, which is actually untrue. Then I will have the right to get remedy against the company as well as the remedy against the promoters and the experts who were responsible for the issue of the prospectus. So if there are any untrue statements, misstatements, omission, I can rescind the contract. I can claim damages from the company. I can also claim remedies against the promoters and the expert. A suit for the damages can be filed for the misstatement. What is a criminal liability? Criminal liability will lead to the promoters and the company directors to be imprisoned in a court as well. If the prospectus contains an untrue statement, every person who is responsible for the untrue statement in the prospectus will be punishable with a fine or an imprisonment or both. So criminal liability can also be there. That is section 34. So every director expert will be responsible and liable. If if let's say that person, director or the expert is able to prove that they were not involved in the misstatement or omission, or they had taken the necessary care to avoid that misstatement, then they will be shielded from the liability, then they will not be held liable. Otherwise they will be liable, punishment, fine, imprisonment, everything. All right. Last topic from the Companies Act, which is a very important topic, the directors. Directors are the actual people behind the working of the company. Ownership of the company is with the shareholders. They're scattered all over, not just in India, but also beyond. There's free transferability of shares, so the shareholders they keep on changing. Thus, the management is given to a professional body, which is the board of directors. So the ownership and the management is different, right? Minimum number of directors, minimum number of 3 directors are required in a public company, 2 in case of a private company, 1 in case of a one person company. Maximum of 15 directors should be there. 15 directors should be there. More than 15 can be there, but it requires the central government's approval. Okay. And at least one woman director should be there, and at least one director should be a resident Indian. Resident means who has stayed in India for more than 128 days, 182 days in the previous calendar years, right? Then one individual person, in how many companies can they hold the directorship? Maximum 20, and public companies maximum 10. So if a person wants to be a director in more than one company, maximum 20, out of them only 10 can be public companies. Then what is the meaning of an independent director? A director other than a managing director or a whole-time director, who is a person of integrity. They possess relevant expertise and experience, who is not a promoter of the company or its holding company or a subsidiary company or an associate company. They have had no relationship other than the remuneration as a director exceeding 10%. They should not have any substantial holding in any other trading concern other than a subsidiary or a holding company. They should not be holding interest in a company more than the limited amount, 50 lakh rupees or 2% of the paid up capital. Now the definition of substantial interest has been revised. Then if even their family members, relatives are holding such value, the person will become ineligible to be an independent director. If they with their relatives hold 2% or more of the total voting power, they cannot be an independent director. Okay. Yes. One third of the total directors for listed public companies should be independent directors. One third of the total directors should be independent directors. Then appointment of directors, promotion of those who are to retire by rotation. If no provisions are made in the articles for the appointment of the first director, then the subscribers who sign the memorandum will be deemed to be the first directors of the company until the directors are duly appointed, right? And other than this, no person shall be appointed as a director unless they have been allotted the director identification number. So they will obtain the director identification number, right? And they have to give their consent to hold office. It has to be filed with the registrar within 30 days of appointment, right? Two-thirds. Now, when we are talking about retirement, two-thirds of the directors, total number of directors, they are liable to retire by rotation. And the remaining directors, they will continue as it is. Okay. So, What else? Board approval, AGM. One third of the rotation pools retires. Which director is going to retire? Which director is going to retire? That has held the office for the longest tenure. Additional directors appointed by the board of directors. If, let's say, temporarily one director is not able to perform their duties, then till the date of the next annual general meeting, this person is going to act. Alternate director to act on an original director if they're absent from India for more than 3 months. When the original director returns, the alternate director will vacate office. Whole time director means they're responsible for each and every act of the firm. Maximum of 5 years term, and then they can be reappointed after a cooling off period. Motions for appointing multiple directors are void. Separate resolution is required for appointing every individual director separate. Now, what are the powers that are given to the directors? What are the powers? Certain powers are given independently. Independent at meetings only. Like they can make calls on the unpaid shares, issue securities and borrow money, invest funds and make loans, approve mergers, takeovers, and authorize buybacks. These decisions can be taken at the meetings only with the approval, right, of the directors only. And certain things can be done only with the shareholders approval. Not just the directors consent, but also the shareholders approval is required. Like disposing of any undertaking of the company, remit or give time for repayment of a director's debt, borrow money exceeding the paid up capital, charitable contribution exceeding 50,000 rupees, or 5% of the average net profit. So this requires approval from the shareholders as well, right? So first away, the members will elect the directors who are responsible for the management. Management directors will authorize the prospectors. The prospectors will call the members, right? Prohibited loans. Giving loans to the directors is prohibited. A company cannot give loans to its own directors except for the wholly owned subsidiaries. Vacation of office. If any person is absent to 12 months without any notice, they will be removed. 1 lakh penalty for receiving loss of office compensation. If any person is removed, they will not receive any compensation. They're not allowed to get any compensation for the loss of office. If they are getting any, then the person will be liable to pay 1 lakh rupees as penalty. All right. With this we have completed the Companies Act. So now we have completed the most important units of the module D. The remaining units like the Limited Liability Partnership Act, the Transfer of Property Act, the Right to Information, Information Technology, Prevention of Corruption, these are very simple short units and not that important for your exam. The most important ones are those that we have completed: Indian Contract Act, Sale of Goods Act, Partnership Act, and the Companies Act. All right. Any doubts, any queries, any questions till here? Any questions till here? All right. So let us now start with the unit 29, which is the limited liability partnership. About it, you have already studied in the Partnership Act. A brief introduction was given. What is an LLP? LLP is a combination of a partnership firm and a company. Some features of a partnership are there, other features of a company are there. For example, LLP is a body corporate, a separate legal entity from its partners. It has perpetual succession, right? These are the things that are similar to a company. Okay, any change in the partners will not affect its existence. It will continue. The existence is distinct, independent from its partner. and it has to be registered, formed, and incorporated as per the LLP Act, right? Then who is going to form the LLP? An individual or a body corporate. Minimum two partners are required. However, any person who is of unsound mind or an undischarged insolvent or some pending application of insolvency is there against them, they cannot be a partner. If the partner count falls below 2 for more than 6 months, then the sole remaining partner, if they continue the business and they're aware that they are the only partner, will now become personally liable for all the LLP obligations during this period beyond 6 months. So if there were two partners and now only one remains, and the one remaining partner continues the business for more than 6 months, now that person will become personally, completely 100% liable, right? Okay, so it should have, now, other than the two partners, there should be designated partners. Every limited liability partnership should have at least two partners, and they should have at least one designated partner. Okay, LLP that are having at least two designated partners, one should be a resident in India. Okay, and designated partners basically mean who will be responsible for the management, persons of integrity, knowledge, and experience. Okay, and if the incorporation document specifies what are the roles and responsibilities, an individual partner, however, cannot become a designated partner unless they give their explicit written consent, right? They will also need to obtain from the central government the designated partner identification number. If the institute asks you from where does the designated partner get their designated partner identification number, remember they need to get it from the central government, and the LLP must file the particulars of the designated partner with the registrar within 30 days. Okay. Then what is the difference between a partner and the designated partner? A partner could be an individual or another body corporate, but designated partners can be individuals. Only individuals can be designated partner. Minimum two partners are required. Normal partners, minimum two designated partners. One should be a resident in India. Partner has the role of capital accumulation, business operations. Designated partner is responsible for all the acts, compliance, filings, and return. Partner has general partnership obligation. Designated partner is also liable for any penalties which are imposed on the LLP for the contravention of the LLP Act. Okay. So, what is an LLP? Two or more persons that are coming together to carry on a lawful business to share the profit. The document, incorporation document, should have the LLP name, the proposed business, registered office, name and address of all the partners, name and address of all the designated partners. Plus, along with the incorporation document, a statement of compliance filed by the advocate, company secretary, chartered accountant, or cost accountant. This expert will verify that each and everything which is given in the incorporation document is correct and true as per their knowledge. So what will the LLP do? They will file the documents with the state registrar. 14 days review window is given to the registrar. Then the registrar, when they're satisfied, they will sign, seal, and give the certificate of incorporation, which is the evidence of the that the LLP is now formed. However, if a person makes a statement regarding the incorporation compliance which is found to be false, right? Then on that person an imprisonment of 2 years and a fine between 10,000 to 5 lakh can be imposed. So any person who has signed the incorporation document, be it the member, partner, or be it the expert, CACS, they will be imprisoned and a fine can be imposed. All right. Then what are the effects of registration? It is mandatory that a registered office is mentioned in the incorporation document. Default on the registered office can lead to a penalty of 500 rupees per day for every designated partner, and maximum 50,000 for every partner as well. Mandatory physical address for all communication should be given the registered office. Now, effects of registration: the LLP becomes capable of suing and being sued, acquiring, owning, holding, and disposing movable, immovable, tangible, and intangible property. And they also have the right to have a common seal. It is optional. Having a common seal is optional for the LLP. If they want, then they can have it, right? Then the incorporation document should be ratified by all the partners. After incorporation, only then it will be binding, right? And it governs the mutual rights and duties. Rights of one partner to another, right of the partner to the LLP. It must be filed with the registrar in the absence of the agreement to any matter. If there is no separate LLP agreement, then the mutual rights and liabilities are as per the LLP Act, first schedule. First schedule of the LLP Act will be applicable if there is no separate agreement to it. Exit. How will a partner exit from the partnership? Voluntarily. They can give a notice to all the other partners, 30 days written notice. Involuntary exit, obviously death of the partner or dissolution of the LLP, or the partner has been declared of unsound mind or adjudged to be insolvent, right? However, a partner will be liable to the third parties as well as to the remaining partners until a notice is given. And even after this secession, they will still be liable for all the unfulfilled liabilities. They were liable and they have not paid it. They have not fulfilled their obligation. They will be liable. After giving the notice, then they will not be liable for the future transaction, right? What are the rights and restrictions of a formal partner? They will keep the capital that they contributed towards the forming of the partnership. They have the right to share in the accumulated profit also. However, they will not have any right to interfere in the management of the LLP, right? They will not be liable, they will not have right to interfere in the management of the company once they have ended their relationship. Statutory legal notice has to be given. Okay, third parties are protected for the acts that were done before the giving of notice, right? Now, if any company or a partnership, they want to transform into an LLP, they can do so, right? A partnership firm, they should comply with the second schedule of the LLP Act to convert into an LLP. A private company, third schedule, and an unlisted public company, fourth schedule of the Act. Once they comply with it, they file with the ROC, and the ROC, they issue a certificate of registration. They are now converted into the LLP. They are governed by the LLP Act. So conversion into an LLP is possible. What is the effect of conversion? From the date of registration as the LLP, the LLP comes into existence by the specified name. All the tangible, intangible property, assets, interests, rights, privileges, all are now transferred to the LLP created. Dissolution. Once the LLP is registered, the previous partnership firm or the private company or the unlisted public company is now dissolved. It is permanently removed from the records of the registrar. It is now dissolved and the new LLP only exists. Okay. Other than that, now this newly created LLP will be governed by the compliance, audits, and returns. Auditing, accounting standards which are prescribed by the central government will be applicable. They have to file annual return within 60 days of the final financial year closure, and the statement of account, and that their solvent must be duly audited within the prescribed timeline. Okay. If if the LLP fails to file the annual return, or there's late penalty, 100 rupees for each day of default for late filing of the annual return, maximum up to 1 lakh. Plus, every designated partner who was responsible for filing the returns will also be liable for a penalty of 50,000 rupees. All right. So that is all from the unit 29. Like I told you, very simple, short units, not that important. Okay. So unit 29 done. Now we'll be starting with the unit 30, Transfer of Property Act of 1882, about which again you have already studied in your module B, the different types of mortgages that are created. Already you have studied, right? So, as per the Transfer of Property Act, it deals with immovable property. When the security interest is created on an immovable property, which will act as a security for a loan which is taken. So, what is the mortgage? What is the difference of a mortgage? Mortgage means transfer of possession to create a security interest, particular specific interest, to act as security on a loan, right? So mortgage is different from the sale. In a sale, the ownership is transferred, but in a mortgage, just the security interest is created. So the transferor, who is the debtor, is called the mortgager. The transferee, who is the creditor, is called the mortgagee. The principal money and the interest secured is known as the mortgage money, and the instrument by which the transfer is effected is called the mortgage deed, right? That is a mortgage deed. So transfer of ownership, price paid, it is a sale, but it is not a transfer of immovable property. This is the whole um, meanings, right? Mortgage deed is a written instrument. The Transfer of Property Act says that it has to be written. The mortgage has to be a written instrument. Mortgagee is the transferee, lender or the bank, the creditor. Mortgage money is the principal money and the interest secured against pecuniary liability. If a loan of 50 lakh is taken, then this mortgage property is to secure the default of 50 lakh rupees. Mortgager could be the absolute owner, co-owner, karta of the Hindu undivided family, guardian of the minor's property. Okay. Mortgage applies to immovable property only. For movable property, you have studied about hypothecation, pledge. Okay. Now there are certain types of mortgages. What is a simple mortgage, conditional mortgage, usufructuary mortgage, English mortgage, mortgage by deposit of title deeds, which is also called equitable mortgage, and anomalous, right? So what is a simple mortgage? Simple mortgage, where without delivering possession of the mortgage property, the mortgager binds himself personally to pay the mortgage money, and they agree that in the event of his failing to pay, the mortgagee will have the right to cause the mortgage property to be sold and the proceeds of the sale to be applied as far as may be necessary for the payment of mortgage money. So that is a simple mortgage. What is a conditional sale? In a conditional sale, the mortgage property is sold to the mortgagee on the condition, ostensibly, that if the mortgager pays according to the contract, the sale will become void. If the mortgager fails to pay, the sale will become absolute. If the sale becomes void, the property will be returned back to the mortgager. English mortgage, when the property is transferred absolutely to the mortgagee, no condition involved, but it will be reconveyed to the mortgager on the payment of the mortgage money. English mortgage is the only type of mortgage where the sale can be done without court intervention. Without court intervention. In all the other types of mortgages, as per the Transfer of Property Act, sale of the mortgage property is not allowed without obtaining a court decree. Right? Then usufructuary mortgage. When the mortgagee has the right to recover the rent or profit which is being generated from the mortgage property, the only way to recover their money is to retain possession until the payment of the mortgage money. Right? Then deposit of title deeds, equitable, where in the specific, this is the most important type, and mark my words, definitely two or three questions will be there from equitable mortgage, where the mortgager delivers the title of document title, ownership title, the documents which are there, to the mortgagee in the specified towns of Calcutta, Madras and Bombay, or any other town specified by the state government. The document of title to the immovable property is transferred. Then it is an equitable mortgage, right? Transfer of the title in the specified towns, but the property can be located anywhere. Anywhere in India, there's no restriction on the location of the property to be mortgaged. Anomalous mortgage is something which is negatively defined. It is not a separate mortgage on its own. It is a combination of a simple mortgage and a conditional sale, a combination of a usufructuary mortgage with equitable mortgage. It is a combination of the above types of mortgages. Okay. Equitable mortgage, delivery of documents must be in the notified town. The mortgage property can be situated anywhere, right? This is the only mortgage that does not require a duly signed mortgage deed. It can be done orally, right? Being an oral transaction, it is completely exempt from the law of registration. So, how to create an equitable mortgage? The mortgager will deliver the physical documents of the title to the creditor, right? The bank branch will prepare a memorandum of entry, and for limited companies, the company must also pass a resolution authorizing the director that they have the right to deposit the deeds. And once recorded, the charge will be filed with the ROC. Okay. The only way allowed to recover the dues in all the types of mortgages in the case of default is through a civil court, right, or the DRT as per the RDB Act. Now it is allowed. As per the Transfer of Property Act, without court intervention, it was not allowed. Civil court dues below 20 lakh must be filed with the lowest jurisdiction. DRT dues above 20 lakh, right? However, English mortgage can be recovered without the court intervention. Non-Hindu, Mohammedan, Buddhist English mortgage can be recovered, right? 3 months default on principal protection, the purchaser's title cannot be impeached for irregularities. Okay, now obviously we have the SARFAESI Act and the RDB Act. Without court intervention, it is allowed, but earlier, as per the Transfer of Property Act, it was not allowed. Then, when the mortgagee sells off the property, how will the proceeds be applied? First, payment of all costs, charges, expenses for the sale that had been incurred for the sale. Second, whatever dues are there to the secured creditor will be paid off. Remaining any will be returned back to the mortgager. This is all as per the Transfer of Property Act, right? Then, uh, difference between ownership and possession. The ownership remains with the transferor, the lessor. When we are talking about the mortgage or the lease when it is created, ownership is with the lessor. Enjoyment is given to the transferee or the lessee. The transfer occurs in consideration of a price, right? When we are talking about a lease, it is a sort of transaction where the good is given for a particular purpose. It is a partial transfer. Rent is paid for a lease, but it will not give the ownership. It must be surrendered to the landlord upon expiry. Now, when the leases are created for agriculture or manufacturing purpose, it will run from year to year, and it can be terminable by either party by giving a 6-month notice. For other purpose other than agriculture or manufacturing, like residential or commercial, the lease runs from month to month, terminable by either party with 15 days notice. All right. Leases for 1 year must be a registered instrument. Less than 1 year, the lease could be registered or an oral agreement accompanied by the delivery of possession. Right? Then, when we are talking about the bank, there are necessary precautions that the bank must take for mortgaging leasehold rights. Verify the title deeds, original lease agreements should be accepted. Copies of the title deeds are not allowed until and unless they are lost or destroyed. Calculate the timeline. Only when the lease period is sufficiently long, then the total repayment period of the bank's advance, then it should be granted. Authorize the mortgage and secure tri-party agreement, lessor, lessee and lender. The creditor, the bank should make sure the lessee has the right to create a mortgage upon the leased property. They have taken the permission from the lessor. Last, we have the actionable claims, which are intangible transfers, transferor, transferee, and the debtor. Okay. What is an actionable claim? A claim to any unsecured debt, excluding mortgage, pledge, or hypothecation, a beneficial right or interest in a movable property which is not in possession, not in possession of the transferor. So, transferred purely by an instrument that should be in writing and it should be signed by the transferor. Condition consideration in return is entirely optional. Okay. However, when the transferor assigns the right to another person, then what happens? There is no mandatory legal requirement to give the notice to the debtor. So A is the creditor, right? C is the debtor, B is the transferee. This actionable claim that C was required to pay to A has transferred it to B. So now B has the right that this payment will be made to, the payment that will be made by C will be made to B, who is the transferee, right? Even if the transferor receives it, they're going to hold it in trust. They have to give it to the transferee. And if the debtor defaults, the transferee can take immediate legal action without the involvement of the transferor. Transferor's consent is not required. So this is the difference between a sale, a mortgage, lease, and an actionable claim. All right, actionable claim. Okay, and that is all. With this, we have also completed the Unit 30, which is the Transfer of Property Act. Any doubts, any queries, any questions still here? If you have any doubts, then do let me know. Okay. Next, we are starting with the Right to Information Act. See, every citizen of India has the right to seek information from public authorities. They have the right to seek information from public authorities. How to seek the information, how the public information officer will give the information, when it can be rejected, that is all governed under the Right to Information Act. The Right to Information Act. Okay. The Right to Information Act of 2005. It was enacted to provide setting out of the practical regime so that the citizens can have access to information, to control corruption also, right? To make the governments and their institutions accountable. It is applicable to all public servants, all government institutions, state institution, everything. right? Now, all the public sector banks, other institutions which are owned and controlled by the government, they need to publish the particulars of their organization, functions, duties, powers of its officers and employees, the procedure followed in the decision making, norms that are set by it for the discharge of functions, rules, regulations, instructions, everything, right? And when the Right to Information Act was enacted, it repealed the Freedom of Information Act of 2002. So, appropriate government could be a central government or state government, any public authority which is established by the Constitution, established by the parliament or state legislature, established by the state or central or local government, owned, controlled, or substantially financed by the government. Even public sector banks are public authorities. NGOs who are substantially financed directly, indirectly by the appropriate government funds are also public authority. So what is information? Any information, record, document, opinion, advice, logbook, contract, information which is maintained in any of these forms, even in electronic data, information related to the public authority. What is the right? Every citizen has the right to inspect the work, documents, records of the public authority. They can extract certified copies, take certified samples of material, and obtain information via electronic form, except the information which is a secret, or it would harm the public interest, or it is related to the national integrity and security, that is exempt. That is not under the Right to Information Act. It is not mandatory to be given, right? Proactive transparency. Every public authority within 120 days of its enactment must publish and update annually its structural information, operational rules, the financial data. What is the monthly remuneration, how the budgets are allocated, how the programs are being funded, and they also should have public interfaces for public consultation, board committee, whatever decisions have been taken, what are the opinion of the board members. All this information should be accessible to the public, right? So the citizen is the information seeker. The central or the state public information officer will deal with the request and provide the information on application made by the citizen. Then we have the state assistant public information or central assistant public information officers. They will receive requests or appeals forward to the PIO or the appellate authority. Appellate authority is a officer senior to the rank of PIO. If, let's say, the PIO rejected the application or provided incomplete, incorrect information, or did not state the reasons for rejection, appeal can be made to the appellate authority. And we have the Central State Information Commissions to hear the second or the final appeals against the appellate authority. Right? So the citizen can make the application in writing, or they can send it by email or even electronic means. They should specify the information that they want to seek, accompanied with rupees 10 only, which can be paid in cash, demand draft, banker's check, or Indian postal order. The PIO responsible will receive the application and initiate the processing. If a request cannot be made in writing, it is the responsibility of the PIO, the Public Information Officer, to help the citizen to reduce the verbal request into writing. Then, when the request is received, if it is the information is regarding something which is absolutely important, regarding the life and liberty of the information seeker, within 48 hours mandatorily the information has to be provided. Otherwise, normally 30 days are given. Within 30 days for normal information is given, information is to be provided. If, let's say, I submitted an application to a PIO of one concerned authority, but the information relates to another third party, the PIO has to, within 5 days, transfer it to the responsible public authority within 5 days. Now, this third authority will have total 35 days to provide the information. Okay, third party. Now, yes, 5 days, the PIO gives the written notice to the third party to disclose the information. Confidential information which is related to a confidential trade secret, that is exempt from disclosure. However, if the disclosure outweighs the public interest, it means that if the disclosure is important for public interest, then the disclosure will be made even though it comes under confidential. Right? So the third party information transferred to the third party, they have 10 days to make an oral representation whether they want to furnish the information or not. Except for protected trade secrets, their disclosure. But if the public interest outweighs the possible harm, then the information which will be disclosed, it cannot be rejected. What are the information that are exempt from disclosure that the PIO can reject? Related to the national and legal security, that disclosure of the information would harm the sovereignty, integrity, security of India. Strategic, scientific, or economic state interest, relations that are received, information which is received from foreign states in confidence, cabinet papers, court which has expressly forbidden to be shared, law enforcement and safety if it endangers the life or physical safety of a particular person, or economic or personal breach of parliamentary or state legislature privilege, fiduciary relationship. These are not allowed. These information are exempt from disclosure. The PIO can reject the application even though it is made by a citizen. All right, these are exempt from disclosure. Then what else? If, however, the public interest override the disclosure, then it will be given. Right? Again, one thing, if any action is done by the public authority, the citizen has 20 years. Any information relating to an event occurring 20 years before the request that date shall be provided. Beyond that will not be provided. Right? The central government will decide when will the 20 years time period start. So if I want to seek an information for an event that occurred prior from today, more than 20 years prior, I will not be given that information. Okay. Rejection. If the PIO fails to give the decision within 30 days, or if it was related to a third party, then 35 days, then the application is deemed to be refused. Otherwise, if it comes under the exempt information, then the PIO must give the reason why the information is being rejected. The applicant must be told if partial information is being given, then what is the reason, name of the decision maker, fee calculation, and obviously the citizen, the applicant will also have the right to review or file an appeal. Right? Then PIO will communicate this. Now, appeal. First appeal will be made to the appellate authority, the officer senior in rank to the central PIO or the state PIO. If the citizen is still not satisfied with the decision in the first appeal, they can make to the second appeal to the central or the state information commission. Right? First appeal to be made within 30 days from the expiry of the decision period or the receipt of the decision. Second appeal within 90 days from when the decision should have been made or the it should have been actually received. Disposal. The first appeal will be disposed by the senior officer within 30 days or further 15 days, maximum 45 days. Second appeal, it is not restricted by any time boundation. The Commission's decision will, however, be binding on all parties. If it is found by the Commission that the PIO has unnecessarily rejected the information, they're trying to protect the public authority or they're hiding some corruption, then the action can be taken against PIO. All right. And the PIO will also be required to pay compensation. So, grounds for penalty: if the PIO without any reasonable cause have failed to receive the application, or they have not furnished the information within the stipulated time, 48 hours, 30 days, or 35 days, they have denied the request with some fraudulent intent, they have knowingly given incorrect, incomplete, misleading information, they have destroyed the information, or they have obstructed, they have caused hurdles in the furnishing of information. What is the penalty? Rupees 250 per day is imposed on the PIO until the information is furnished, subject to a maximum of 25,000 rupees. Obviously, a chance will be given. Obviously, a chance to be heard will be given. Sure, just a second. Fine now. Okay, right. So this is the whole synthesis. The citizen, by paying rupees 10, will make an application to the public authority, and they will give the information if it is allowed, right? Processing engine, 48 hours if related to life or liberty, 30 days in normal situations. Third party plus 15 days will be given. If information is granted, well and good. If information is rejected, deem refusal. If rejected with malified intent, unnecessary reason, then appeal will be made and penalty will be imposed. All right. So that is all from the Right to Information Act. The Right to Information Act. Done. Unit 30 done. Next, we have the Information Technology Act of 2000. Now, Information Technology Act basically deals with the electronic governance, certifying authority, digital signature, critical information infrastructure. Okay, so let us start. Now, um, in the United Nations, the General Assembly of United Nations, it was actually decided a model law on electronic governance was adopted by the United Nations Commission, and favorable consideration to e-commerce, etc., or e-governance was given. Based on this, the IT bill was passed by both the houses of the parliament of the Indian Parliament. In August 2000, the president gave their assent to the bill, and then it became the act. It has been amended many times: 2002, 2009, 2017. And this act has also led to amendments in the IPC, the Indian Evidence Act, Bankers Books Evidence Act, as well as RBI Act. Okay. Basically, whenever any information, any contract is expressed in the electronic form, it has full validity and enforceability. Okay. Legal recognition to electronic records is given. Legal recognition to electronic signatures is given. And legal recognition to electronic records in government agencies is also given as per the Information Technology Act, right? Information doesn't matter whether it is maintained in physical form or in electronic form. It should remain accessible for usage. Subsequent reference, originality: if it was originally retained in the physical format, in the same manner, exact same things should be given in the electronic record also. And traceability: we should be able to trace the original documents which were there in the physical format. Now, this is very important. This question was asked in your 2025 exam. What is a private key and what is a public key? A asymmetric crypto system to create a secure key pair has been created. This is for digital authorization, digital signature, and digital usage. Private key is used to create a digital signature. It is kept entirely secret. It is like a password. Only the individual who has the private key will use it, right? Public key is used to verify the digital signature. It is listed publicly in the digital signature certificate. So remember, exactly this question was asked. What is the purpose of a private key? What is the purpose of a public key? Private key is used to create a digital signature. Public key is used to verify the digital signature. So the central government is the controller of certifying authority. Certifying authority has the responsibility to issue the digital signature certificates, private and public key. Who is the supervisor of these certifying authorities? The central government, right? Foreign recognition is also given. Certifying authority is a person who has been granted license as per the Information Technology Act to issue digital signature certificate. The controller of certifying authority will have the role of supervision and laying down the standards, the rules, standards, duties of the certifying agencies, and they will give the certificate. They will make sure that the public and private key issued are correct. The business and audits will be conducted, and they will resolve conflicts of interest between the certifying authorities and the subscribers. They will also maintain a public database. Okay. Now there is the critical information infrastructure. Certain computer systems, certain information are critical to the national security, economy, public health and safety. The government may declare any computer resource as critical information infrastructure, and if anyone tries to gain unlawful access to such a computer system or information, they will be liable to penalty as well as imprisonment, right? If someone tries to steal data or cause sabotage, they want to download, copy, extract data which is otherwise critical, unauthorized access to the data, such person is deemed to have contravened with the provision. If they introduce a computer virus disrupting the network, damaging the database, again, contravention. If someone tries to get unauthorized access or denying actual authorized person to the computer system, so that person is known to have caused a contravention. So the act appoints officers of the rank of director to the government to adjudicate the contravention, right? Breaching the shield. Any person who secures or attempts to secure unauthorized access faces criminal liability, imprisonment extending up to 10 years, and liable to a fine, right? Offenses such as tampering with the document, hacking, publishing obscene electronic information. Investigations must be conducted by a police officer not below the rank of inspector of police, right? These are high crimes and investigation protocols. Now, the IT Act basically provides explicitly to all electronic checks and truncated checks also. Basically, the Negotiable Instruments Acts are also covered. The central government has caused amendments in the RBI Act for this particular purpose. And the central government can also, if they want to modify anything, if they want to change any rule, it is an act created by the parliament, so it will be placed before both the houses of the parliament. After agreement, that will be passed. If, let's say, there's any order made by the controller of the adjudicating officer against a person that you have contravened and any penalty is imposed, the grievance, they can file an appeal within 45 days. This appeal is to be made to a tribunal which is created for this purpose. What is the tribunal? Which is the tribunal which is created for hearing appeals for this particular purpose? It is the TDSAT, the tribunal. Okay, they will receive the appeal. TDSAT is the Telecom Disputes Settlement and Appellate Tribunal, created as per the Telecom Regulatory Authority of India. So within 45 days from the order of the adjudicating officer, appeal can be made. And then they will dispose of the application within 6 months from the date of receipt. Okay. Um, Exemption, pre and post, not at all important. We can ignore it. Done. That is all from the Information Technology Act. Last unit from the module D, the Prevention of Corruption Act. The name itself tells us this is the unit 33, Prevention of Corruption Act, to consolidate and amend the law relating to the prevention of corruption, for imposing penalty and fines on the public servants who are found to be involved in corruption, right? So that is the Prevention of Corruption Act of 1988. It was amended in 2013 and 18, and then in 2021 an amendment was done. The standard operating procedure has been introduced for the investigating agency. Whenever the investigating agencies, they are investigating the cases of corruption by the public servant, what is the procedure that they need to follow, right? There are certain definitions like the adjudicator. These are the special judges. The cases of corruption, as per the Prevention of Corruption Act, will be dealt only by the special judge appointed by central or state government, who could be a sessions judge, an additional sessions judge, or a assistant sessions judge. They are empowered to try any offense punishable by the Prevention of Corruption Act, and it will include any conspiracy to commit any corruption, they're trying to commit any corruption, or abetment of any of the offenses, right? So the trial must be ideally concluded within this time period, that is 2 years. Whenever a person, public authority, is found to be involved in corruption, their trial should be completed within 2 years. If delayed, the judge must record the reasons in writing and extend the trial date. It can be extended to 6 months at a time. 6 months at a time. And the final absolute time period for the conclusion should be 4 years, maximum within 4 years. So, normally 2 years, further extension 6 months at a time, maximum within 4 years, the trial should be completed. Then, now, transferability of cases. Can a Prevention of Corruption Act covered case be transferred from a special judge to a High Court or Supreme Court? No. It is strictly limited. From one special judge to another special judge, it can be done. But from one special judge to the High Court or regular court is not done. Cases triable by a special judge can only be transferred to another special judge. This decision was taken in the AR Antulay versus RS Nayak case. And then again in M. Gopalakrishnan versus the Inspector of Police. Now, this table here clearly shows you the types of corruption and the punishments as per the Act. Okay. For example, when the public servant is bribed, then they are punishable with an imprisonment for a term not less than 3 years, up to 7 years, and a fine. If they're found to be taken undue advantage to influence the public servant, then 3 years to 7 years and a fine. Now, let me tell you one thing. If possible, if you are able and if you have studied this unit earlier with me, then you can remember these things. Otherwise, if you are studying it for the first time, ignore it. Even if one question comes, doesn't matter. Do not waste your energy or time in trying to remember this. But you must remember these three sections. Section 13 is a criminal misconduct. If a public servant dishonestly, fraudulently misappropriates the property of the public, of the government, or they intentionally enrich illicitly during their office, then the punishment is 4 to 10 years plus a fine. Habitual offender, section 14 of the Act. If a person had previously committed the offense and they commit another offense, 5 to 10 years plus a fine. Section 15. If someone is trying to commit an offense but they are stopped midway, they're attempting to commit a criminal offense, then also 2 to 5 years imprisonment plus a fine. So the court is mandated to consider the specific criteria when they're fixing the fine amount, the amount or the value of the property which is obtained by the accused under the corruption will be used to determine the fine, or the pecuniary resources or property for which the accused cannot satisfactorily account. For that, quantifiable or unquantifiable rule will be used. Then, who is authorized to conduct the investigation? Authorized officer may investigate or make arrest without the magistrate order or warrant. If someone is found attempting the corruption in midway, they are found without magistrate's order or warrant, they can make the arrest. For the Delhi Special Police Establishment, inspector of police will conduct the inspection investigation. In metropolitan areas, the assistant commissioner of police will conduct the investigation. Elsewhere in the country, a deputy superintendent of police, not below this rank, will conduct the investigation. The state government may specially authorize inspectors generally to conduct the investigation. Then the power to inspect bankers' books, the investigating officer, they have the right. They can inspect the banker's book to make out how much contravention, how much corruption has been done. And the bank must provide certified copies. You have studied about the Bankers' Books Evidence Act in the module C, same thing, right? Okay, so the power, only the investigator superintendent of police, they can get the certified copy. Officers below this rank cannot exercise unless specially authorized by a superintendent of police or a higher rank, right? Then normally prior approval for conducting investigation or imprisonment is required. If an offense is relatable to the official decision or function, no approval is necessary. Remember this point. No approval is necessary for on spot arrest. If someone is caught on spot accepting bribes or taking undue advantage, no approval is required. Immediate arrest can be done. Otherwise, before investigation or arrest, if the public officer is appointed by the central government or it is related to the affairs of the union, then the central government's approval is required. Affairs of the state, then the state government approval. Others, whatever is the competent authority, will be required. Decisions must be conveyed. The authority, central state, should convey the decision within 3 months. Another 1 month can be given on written request, right? So no court shall take cognizance of the offences without the union state or the required authority. Only police investigators can request the sanction, and the courts will not reverse the sentences or stays unless it has resulted in a failure of justice. Even if an appeal is made by the public servant, the court will not reverse the order unless it results in a failure of justice, right? What appeal? When the special judge decides an issue, they impose a fine and penalty. The person who was involved here can make an appeal to the High Court, directly to the High Court, but only on questions of law, otherwise not. All right. So that is all. Okay, that is all. In the Prevention of Corruption Act, when the public servant commits an offense, investigation is triggered, which requires prior approval if it is an official act. The investigation is authorized by the respective ranks. The prosecution sanctioned grant, and now the trial by the special judge will be done within 2 or 4 years, and the appeal will lie to the High Court. That is all. With this, we have completed the whole module D. The whole module D is done. All right. And we have also revised all the 4 modules now. In the previous few days, we have revised the module A, B, and C. And now the module D is done. What we are going to do now is that we will take a 15 minutes break. Okay, let us take a 15 minutes break, and then we will meet again and we will continue with the questions. After this, we have questions from all your four modules. Like this, we'll be practicing questions. The session after the 15-minute break will go on for around, let us say, 1.5 hour, 1.5 or 2 hours max, 11. All right. So let us take a 15 minutes break, and then we will continue. Then we will continue with practicing the questions. All right. 15 minutes break. All right. So the break is over now. Is everyone back? Now, before we start, now, like I told you before the break, also, we'll be practicing questions now, okay, on all the four modules, and we'll be going very fast, okay, very fast. And I want all of you to participate. So, I need your confirmation, everyone. Kamla, Chandravardhan, Saran Raj, everyone who is present, everyone. Give me a confirmation, and I want all of you to be active and answer the questions, okay? Only when we go in a fast manner, then we'll be able to complete the questions by 11. I want to complete it by 11 so that you have enough time to take rest, get up with a fresh mind in the morning, and then revise. Okay? So let us start with the first question for your revision. Here, consider the following statements about limited liability partnerships. LLPs incorporated in India are treated as body corporates. Foreign LLPs are excluded from the definition of body corporate. A corporation's sole is expressly excluded from the definition of body corporate. Cooperative societies are included within the definition of a body corporate. Which of the following statements are correct about the definition of a LLP? Definition of a limited liability partnership. Start answering. The options are 1, 2, and 4, 1, 3, and 4, 1 and 3, or option D, 2 and 4 only. What will be the correct answer? 10 seconds. You have 10 seconds to answer this question. So, the first statement is true, but foreign is a foreign LLP excluded from the definition of body corporate? No, it is not. If it is a foreign entity that wants to open a place of business in India, it can function. It is include. Okay. So the second statement, a foreign LLP are excluded from the definition of India. Second statement will be incorrect. Okay, it will be incorrect. First statement is correct. LLPs incorporated in India are treated as body corporate. It has a separate legal entity. First is true, but second is wrong. A corporation's sole is expressly excluded from the definition of body corporate. Yes. Why? Because a corporation's sole means something which is by one person, right? It is not included as a definition of LLP body corporate. So the correct answer will be 1 and 3. 1 and 3 are correct. Option C. Consider the following statements about LLP. An individual or body corporate may become a partner in a LLP. An undischarged insolvent is disqualified from becoming a partner if the number of partners fall below 2 and continues for more than 6 months. The sole partner is personally liable for the obligations incurred for that during that period. And statement 4, a minor can be admitted as a partner in LLP with the consent of all the partners. What will be correct? Option A, 1, 2, and 3, B, 1 and 4, C, 2, 3, and 4, or option D, all of the above. Which of these statements will be correct? So we have discussed that in an LLP, yes, individual and corporate may become a partner, but when we are talking about designated partner, that can be an individual only. An undischarged insolvent is disqualified if the number falls, minimum number in an LLP should be 2. If it falls below 2, if it becomes 1 and the person knows about it, they continue for more than 6 months, then the person will now become personally liable for the obligations incurred during that period. However, a minor is not a competent person A minor cannot be admitted as a partner in the LLP even with the consent of all the partners. A minor can be given a right in the profit and property, but they will not be liable for the firm. All right, so the correct answer will be option A. Again, you need to answer about LLPs. An LLP agreement must be in writing. It defines the mutual rights and duties of partners and of LLP. In the absence of an agreement, the provisions of Companies Act 2013 automatically apply. The LLP Act can be varied only with the consent of all the partners. The LLP agreement. This is a very simple question. Which of these statements are correct? 1 and 2 only, 1, 2 and 4 only, 2 and 3, or option D, 1, 3 and 4. What will be correct? What will be the correct answer? So an LLP agreement must be in writing. Agreement should define the mutual rights and liabilities, correct? But in the absence of any agreement, the provisions of the correct. The LLP Act will be applicable, not the Companies Act. Kamala, correct. The correct answer will be option B, 1, 2, and 4. The third statement is incorrect. Correct. Yes, B will be true. Every LLP must have at least two designated partners, both of whom must be individuals. At least one designated partner must be a resident in India. Consent of designated partners must be filed with the registrar within 30 days of appointment. A body corporate can be appointed as a designated partner if it nominates an individual. I have already told you the correct answer about it. What will be true? What will be the correct answer? Which of these statements will be correct? What will be the correct answer, everyone? So we have discussed that in an LLP there will be partners and mandatorily designated partners, right? Designated partner, at least two designated partners should be individuals, and at least one of them should be a resident in India. However, in case the LLP, all the partners are body corporate, or one or more of the partners are individual and body corporate, and at least two individuals who are partners shall, when the partners are nominees of the corporate body, they can act as designated partners. Okay, so yes, the first statement would have been true. Both of them must be individuals. However, there's an exception. If if all of the partners are body corporates, right, and one of the partner is a nominee of the body corporate, then the body corporate can also act as a partner. The body corporate can also act as a partner. So yes, the correct answer will be option C, 2, 3 and 4. Okay, 2, 3 and 4. Normally two designated partners who should be individual, but if an LLP does not have many designated partners as body corporate only, then if the nominee of the designated of the corporate body is a partner, it can act as a designated partner. You will get the PDF. I will share it in the Telegram channel. Okay, once we are done with the session, I will share it in the Telegram channel, and I will also share the Telegram channel link with you, right? At least two partners must subscribe to the incorporation document for a lawful business with profit motive. The incorporation document must be filed with the registrar along with prescribed fees. A false statement in the incorporation attracts imprisonment up to 2 years and a fine of 10,000 to 5 lakh. The registrar must issue a certificate of incorporation within 30 days, which will be conclusive evidence of registration. What will be the correct answer about the LLP? About the registration of the LLP. What will be the correct answer? Everyone, what will be the correct answer? Options are 1, 2, and 3, 1, 2, and 4, 2, 3, and 4, or all of the above. So, if any default is made in complying with the requirements of the section, the LLP and its partner will be, this is for the registered office. Others also, everyone answer? All right. So the first statement will be correct. The first statement is true. The second statement is also true. The third statement is also true. Any false statement which is given here will be, any person who gave the false statement will be punishable, right? Punishable with a term that can be extended to 2 years, and a fine that shall not be less than 10,000 rupees can be extended to 5 lakh rupees. Correct. Now, when the requirements have been fulfilled, the registrar will retain the incorporation document if any section has not been complied with, and within a period of 14 days, register the incorporation document, give a certificate that the LLP is now incorporated, and deliver it. It will be sufficient evidence. So, not 30 days, but the correct answer is 14 days. Within 14 days, it will be issued. So first, second, and third is correct, and the fourth statement is incorrect. Okay, 14 days it should be issued. Subscribers to the incorporation document automatically become partners of the LLP. Rights and duties of the partners are governed by the LLP agreement filed with the registrar. In absence of LLP agreement, provisions of the first schedule apply. A former partner continues to be deemed a partner until notice of secession is given to the registrar or third parties are made aware. So, who all will become automatically the partners when the LLP is being formed? Then those who sign the incorporation documents will become the first partners, right? And if there is anything in contravention contrary in the incorporation document, that will be followed. Otherwise, the first schedule will be followed. They will also become the directors. Yes, the correct answer is option D. All of the above are true. All of the above, particularly the fourth statement. If they cease to be a partner, they will still be liable till they give a public notice. Till they give a public notice. Correct. LLP, every LLP must file a statement of account and solvency annually, which must be audited. The central government may prescribe accounting and auditing standards for LLPs after consultation with NFRA and ICAI. Annual returns must be filed within 90 days of the closure of financial year. Penalty for default is 100 rupees per day. subject to a maximum of 1 lakh for LLP and 50,000 for the designated partners. What will be correct? Which of these statements are true? 1, 2, and 4, 1 and 3, 2, 3, and 4, or all of the above? What will be the correct answer? What will be the correct answer? So every LLP is required to file an annual return duly authenticated with the registrar within 60 days of the closure of its financial year, not 90 days but 60 days. So the third statement is incorrect. Exclude the third statement. We cancel out B, C, and D. Only option A, 1, 2, and 4 will be correct. Option A. Annual return must be filed within 90 days of the closure of the financial year. Okay, debts of 20 lakh or more are enforced through the DRT. Debts below 20 lakh must be enforced through a civil suit. Suit for enforcement of mortgage is filed where the property is situated. Execution of decree requires prior attachment before sale of the mortgaged property. What will be correct? So about DRT and civil code we have already studied, right? In the DRT, only those cases where the amount is more than 20 lakh will be filed. Below that can be taken to a civil suit. We have also studied about the Lok Adalat, right? Suit for enforcement of mortgage is filed where the property is situated. But execution of decree does not require prior attachment order before the sale of mortgaged property, right? As per the Transfer of Property Act, the banks cannot take action against the mortgaged property without court decree. Without court decree. Okay, so prior attachment of order is not required. First, they will take the decree from the court and then they will start with the proceeding. A lease is a transfer of right to enjoy property for a certain time or perpetuity for rent or premium. Agricultural or manufacturing leases are deemed year to year, terminable by 6 months' notice. Other leases are deemed month to month, terminable by 15 days' notice. A lease exceeding 1 year requires registration with a written document. About a lease, we have studied about the Transfer of Property Act, about the lease. Which of these statements are correct? What is a lease? Correct statement, correct definition is given. Agricultural lease, year to year, terminable by giving a notice. Either party can give a notice of 6 months. Correct. Other, like residential or commercial, it could be a month to month, 15 days termination notice. And if a lease is exceeding 1 year, then it does require registration by a written document. All right, so yes, all of these statements are correct. Option D. All of these statements are correct about a lease. An actionable claim includes a claim to debt not secured by mortgage, pledge, or hypothecation. It also includes beneficial interest in movable property not in possession of the claimant. Transfer of actionable claim must be effected by written instrument signed by the transferor. Notice to debtor is mandatory for validity of transfer of the actionable claim. If the debtor pays the transferor without knowledge of the transfer, such transfer will be valid. Which of the above statements are correct? 1, 2, and 4 only, 2, 3, and 4 only, 1, 2, 3, and 5, or 1, 3, 4, and 5? What will be the correct answer? What will be the correct answer? So, actionable claim, notice to the debtor is mandatory for a valid transfer. This is incorrect. Rest all the statements are true. Rest all the statements are true, just that the fourth statement, notice to the debtor, is not mandatory for the transfer. And if the debtor defaults, then the transferee can take action without the involvement of the transferor as well. Okay. A PIO must assist applicants even if request is not made in writing. If the requested information pertains to another authority, the PIO must transfer the request within 10 days. A PIO may seek assistance from other officers who are then deemed PIOs for that purpose. Failure to provide assistance amounts to deemed refusal. Which of the above statements are correct about the Right to Information Act? Regarding the Right to Information Act, which of these statements are correct? 1 and 2 only, 1, 3 and 4 only, 2, 3 and 4 only, or all of the above? So we have discussed that if the requested information, I made a request to a particular PIO, but it relates to a third party, another authority, the PIO must transfer the request within how many days? Within 5 days, not 10 days, within 5 days. So the second statement will be incorrect. 1, 3 and 4 will be correct. Absolutely true. Okay. 1, 3 and 4 will be correct. Consider the following statements about the Right to Information Act. The In normal cases, information must be provided within 30 days of receipt of request. In matters concerning life or liberty, information must be provided within 48 hours. The period between intimation of fee and payment is excluded from the 30-day limit. If no decision is communicated in the prescribed time, it amounts to deemed refusal. I hope you have already attended all the marathon sessions on the YouTube that we have done in the previous 3-4 days for module A and B, C and D. The units that have already been completed there, I'm not repeating it here today. Okay, only those units which were not completed, we did not practice questions from those units, that we are doing today. Remaining questions are already done. Right. So in normal cases, yes, the information has to be provided in 30 days. In particular, when it relates to life and liberty, then 48 hours. Okay. And third party, if third party information is requested, they have 10 days to make representation. Disclosure, when we are talking about the period between intimation, so all of these statements are true, right? All of these statements are correct. The period between intimation of fee and the payment of fee is excluded from the 30-day limit. So option D, 1, 2, 3 and 4 will be correct. Consider the following statements about the Right to Information Act. Notice to third party must be given within 5 days of receiving the request. Correct. Third party has 10 days to make representation against the disclosure. Is it true? Yes. Disclosure is permitted only if public interest outweighs. The exempted information category will still be needed to be disclosed if it outweighs the possible harm. But third party has no right to appeal against disclosure. Incorrect. If the third party information is being disclosed and they feel that it will harm their trade secret or commercial standing competition, then they can make an appeal against the disclosure even when ordered. So the correct answer will be option A, 1, 2 and 3 only. 1, 2 and 3 only. All right. Information which is prejudicial to sovereignty, security, or strategic or economic interests may be denied. Correct. Information forbidden by court or amounting to contempt of court will be denied. So this comes under the exempted information. Information which is exempted from disclosure. Commercial confidence, trade secret may also be denied unless public interest justifies disclosure. Fiduciary information must always be denied. No. Fiduciary information is exempt, but if disclosure is important for public interest, it will be disclosed. Cabinet papers and deliberations are exempt for disclosure. Correct. So the correct answer will be option C. 1, 2, 3, and 5. Fourth statement is incorrect. If public interest outweighs the possible harm, then the fiduciary information will also be disclosed. Now, according to the Information Technology Act, which of these statements are correct? It is based on the United Nations Model Law on E-commerce. It was enacted in May 2000 and received presidential assent in August 2000. The act applies only to offences committed within India. Amendments were made to IPC and various other acts. So, I have told you earlier also in your GIB preparation also, if any statement appears to be negative, appears to be demeaning for the act, cancel it out. It will not be true. Here, the third statement says that the act applies to offences only committed in India. Why? It will apply to foreign offences also if it is affecting or it is committed by an Indian citizen. So the correct answer will be option A. 1, 2, and 4. Third is wrong. If you think that any statement is um, appearing to be negative or it involves some numerical number or the statement is over exaggerating something, simply mark it as wrong. Right? This is the trick you can use if you do not know the exact correct answer. Do not leave any question unanswered because there's no negative marking. Again, IT Act. Offences under the IT Act can be investigated only by a police officer not below the rank of Inspector of Police. Offences include tampering with source document, obscene electronic publication, hacking. Investigation powers extend to offences under the IPC amended by the Act. Cyber offences can be investigated by any police officer. Again, read the statements carefully. Do you think some statement should be wrong according to you? You would have not made such a provision if you were making the law, right? So it is a very special case. Information technology does only authenticated or police officers not below the rank of inspector should be allowed to investigate. It can be investigated by any police officer regardless of the rank. Should be incorrect. So the correct answer will be option B, 1, 2, and 3 only. Fourth statement is incorrect. Fourth statement is incorrect. Consider the following statements. IT Act provisions apply to electronic and truncated checks. The Negotiable Instruments Act has been amended, so yes. Notifications regarding electronic checks are issued in consultation with RBI. True. Electronic checks are excluded from the definition of negotiable instruments. No. We have studied the Negotiable Instruments Act. Truncated checks are paper checks converted into electronic form. Correct. The electronic form and the paper check should be identical. There should be no difference. Right? Just that the normal check is converted into electronic form for clearing. Right? So the correct answer will be option C. 1, 2, and 4 only. Third statement incorrect. Undue advantage excludes non monetary benefits such as gifts or favors. Okay. Even if appointment is defective, the actual holder of the office is deemed a public servant. Undue advantage means gratification other than legal remuneration, not limited to money. The definition of undue advantage was introduced in 2018. So, if someone takes an undue advantage other than monetary terms, a house, a car, will it be not considered as corruption? It will be. It is considered. That is why the first statement will be incorrect. Third statement says undue advantage means any gratification which is not limited to money. Money and non monetary benefits such as gifts and favor as well will be included in the definition of undue advantage. Consider the following statements about the Prevention of Corruption Act. Which of these statements are correct? Special judges are appointed by central or state government. Must be sessions, additional or assistant session judge. True. Only special judges can try the cases. Trials must be conducted day to day and concluded within 2 years, extendable to 4 years. This is also true. Normally 2 years, otherwise 6 months at a time, maximum four. Transfer of cases is permitted to High Court. Incorrect. As per the Antulai case, transfer of case from one special judge to another special judge is allowed. But transfer from one special judge to a high court is prohibited. It is strictly prohibited, not allowed. All right. So the correct answer will be option A, 1, 2, and 3 only. Criminal misconduct includes misappropriation of property and rested. I told you that the three sections are very important from the Prevention of Corruption Act. One of these section was this criminal misconduct, section 13. So yes, it includes misappropriation, converting for their own use any property that was given to them as a public servant, right? Punishment for criminal misconduct 4 to 10 years plus fine. Is this the punishment? Not less than 4 years, 10 years, and liable to a fine. Habitual offenders, 5 to 10 years and a fine. Attempt to commit the offenses, 2 to 5 years plus a fine. All of these statements are true. Abetment is also punishable up to 7 years. Right? Abetment is also attempting to commit an offense is also punishable with a imprisonment term. Okay, so the correct answer is D. Court must consider the value of property or resources illicitly obtained while fixing the fine. Fine is capped at 50,000. No, fine is not fixed as per the law. The court will take into consideration what is the value of the property that has been acquired under corruption. Fixed fine, discretionary, guided by the court. Court may impose fine in addition to the imprisonment. So the second statement is wrong. Option B, 1, 3, and 4 will be correct. 1, 3, and 4 will be correct. Now here's a case study. Mr. A sends an email to Mr. B offering to sell his antique painting for 50,000 rupees. Mr. B replies, I accept to buy the painting but deliver it with a new frame. Mr. A assists that the painting will be sold as it is, without any additional frame. Mr. B transfers 50,000 to Mr. A's account. Later, Mr. B sues Mr. A claiming breach of contract for not providing the new frame. Which of the following will be legally correct? So, like this case study questions are asked. Tell me, answer this question. I'm giving you 20 seconds. A valid contract exists because the payment was made. A voidable contract exists at the option of Mr. B. No valid contract exists because acceptance was conditional. A contract exists, but it is unenforceable due to lack of consensus ad idem. What will be the correct answer? What will be the correct answer? Both the parties have agreed to different things. A has said something different, B has said something different. Will this be a valid contract or not? According to you, according to the Indian Contract Act that we have studied today, it will not be a valid contract because the acceptance was conditional. Consensus ad idiom is not there, right? Payment will not just alone payment is not sufficient to validate a contract. Okay, this will be absence of consensus ad idiom and it is not unconditional. Company X agrees to supply 100 laptops to Company Y for rupees 30 lakhs. Company Y agrees to pay upon delivery. Later, Company Y argues that since Company X produced laptops from a third party at a discounted rate, Y should pay only 25 lakh rupees. Which of the following will be correct? Consideration fails because company A did not spend 30 lakhs. Reciprocal promise exists. Company Y must pay the agreed price of 30 lakh rupees. Agreement is voidable at the option of company Y. Agreement is not void because the consideration was not equal. So the buyer had agreed to pay 30 lakh rupees. Can they later on rescind the contract, cancel the contract, saying that I need discount? No. Reciprocal promise exists. Both the parties have agreed, promised, given their consent to the same thing. Delivery of laptops, 100 laptops for 30 lakh rupees. Right? So, so the company Y is bound to pay the agreed price, that is rupees 30 lakh. They cannot pay less than what has been agreed. All right. So the correct answer will be option B. A money lender advances 50,000 rupees to a poor farmer. He induces the farmer to sign a bond for 1 lakh rupees, repayable with 10% monthly interest. The farmer later challenges the bond in court. Which principle applies? The bond is valid because the farmer signed it knowingly. The bond is voidable due to undue influence. The bond is void because consideration failed. The bond is enforceable only to the extent of 50,000 plus the reasonable interest. So we have studied that any contract requires free and genuine consent. But here free and genuine consent was not there, right? The farmer believed the amount to be 50,000 rupees, but the money lender forcefully made them sign 1 lakh rupees repayable with 10% monthly interest. So the court may set aside the contracts which are induced by undue influence. The bond is enforceable only to the extent of 50,000, not 1 lakh. Why? Because this is without free genuine consent. Without free genuine consent. So the correct answer will be D. Mr. A contracts to indemnify Mr. B against any liability arising from a loan transaction with Mr. C. So A is the surety, B is the creditor, C is the debtor. Okay. Mr. B incurs an absolute liability to pay 5 lakh rupees to Mr. C, but has not yet discharged the payment. Mr. B sues Mr. A to compel him to pay off the liability immediately. So, what is the liability? What is the obligation on the surety that you need to identify? Which of the following statements is correct? Mr. A is liable immediately since B's liability is absolute. Mr. A is not liable until Mr. B actually pays the debt. The contract is voidable at the option of Mr. B, or option D. Mr. A's liability arises only after a decree is passed against B. So, what will be correct? In this situation, the default has occurred. B incurs an absolute liability to pay. So, Mr. A is liable since B's liability is absolute. Right? Now, this is the question that was dealt in the Gajanan Moreshwar versus Moreshwar Madan. Once the indemnity holder incurs an absolute liability, he can compel the indemnifier to discharge it even before the actual payment. The contract of indemnity. The indemnifier will have to pay it. The insurance company will have to pay it. Doesn't matter the policy holder pays it first or not. Right? So the correct answer will be A. Mr. A guarantees Mrs. A's purchases from B's shop up to 20,000. We have done the exact same example today itself. So you can answer this. Later, Mr. A and Mrs. A separate, and Mr. A sends written notice to Mr. B revoking the guarantee. Mrs. A continues to purchase the goods worth 5,000 after revocation. Which of the following will be correct? So here we are talking about a continuing guarantee which does not stop at one transaction. It goes beyond and it carries on for more than one transaction. So Mr. A is liable for all the purchases including those after revocation. Mr. A is liable only for the purchases made before revocation. Mr. A is discharged completely once the notice is given, or Mr. A is liable only if Mrs. A continues to live with him. So, what will be the correct answer? 10 seconds to answer this question. We are talking about the continuing guarantee, which has been now revoked. The surety has sent the notice to the creditor revoking the guarantee. So, what will happen now? In this situation, Mr. A will be liable for the purchases that were made before the revocation only. Right? They will remain liable for the transactions prior to the revocation. The continuing guarantee can be revoked as to the future transactions by notice. So all the transactions that are done by Mrs. A after the revocation notice, Mr. A will not be acting as a surety for them. Only for the transactions that were done before the revocation notice. Mr. B owes 1 lakh rupees to Mr. C guaranteed by Mr. A. The debt becomes payable, but C refrains from suing B for 2 years. A claims discharge due to creditor's inaction. So, which of the following will be correct? A is discharged since creditor delayed enforcement. A is discharged only if the contract expressly provided for discharge. A is discharged if minimum period expired. A remains liable. Mere forbearance does not discharge the surety. So we have discussed forbearance to sue. Forbearance to sue means delay, and mere forbearance does not discharge the surety. The surety will be discharged only with express agreement, not by anything else. Right? So A will remain liable. Mere a delay on the part of the creditor will not discharge the surety. All right. So the correct answer will be option D. X, Y, and Z are co-sureties for a debt of rupees 3 lakhs. Creditor releases X from liability. Later, the creditor sues Y and Z for full default. Y argues that the release of X discharged all co-sureties. So we have discussed co-sureties to a debt. Discharge of one co-surety does not release the other co-sureties, right? So the correct answer will be option C. Release of one co-surety does not discharge others. So Y and Z will pay in to um, full 2x to the creditor, 3 lakh rupees. 1 lakh, 1 lakh, 1 lakh each they are responsible. And then the 1 lakh that X was responsible to pay, 50,000, they have to, X has to pay to Y and Z. Okay, this can be done. But just the release of one co-surety will not discharge all the other co-sureties as well. Mr. A leaves his cow with Mr. B. The cow delivers a calf. Which of the following is correct? B must return only the cow. B must return the cow and calf to A. B can retain the calf as compensation for care. B is liable only if the contract so provides. So according to the bailment, when anything is bailed, any profit or any increase in it has to be returned back by the bailee to the bailer. This is the duty of the bailee. So, bailee must return the goods plus any increase or profit. In this case, the calf that was delivered by the cow was an increase, right? Was an increase. So, B will have to return the cow and the calf to A. Bailey will return it. Mr. A deposits securities with his banker. Later, he owes the banker on another account. Banker retains the securities against general balance. What will be the correct answer? Banker has general lien by law. Banker has no right unless expressly agreed. Banker can retain only securities deposited for loan. Bankers must return securities regardless of debt. So bankers, factors, attorneys, and policy brokers, they enjoy general lien. So here the action of the bank will be correct. He can retain the securities against the general balance. So the correct answer will be option A. Mr. A appoints Mr. B as his agent to collect payments from various clients. Mr. B collects 10 lakh rupees but deposits only 8 lakhs, claiming 2 lakhs were spent on miscellaneous expenses. Mr. A demands accounts, but Mr. B fails to produce the vouchers. Later, one client sues Mr. A alleging wrongful collection by Mr. B. Now, Mr. A is seeking indemnity from Mr. B. So, what will be correct? Mr. B is entitled to retain 2 lakh rupees as expenses. Mr. B must render proper accounts. Failure amounts to a breach. Mr. A cannot claim indemnity since collections were lawful. Mr. B is discharged once he remits partial amount. So it is the duty of the agent to render proper account. They cannot misappropriate. And the principal can demand indemnity for the wrongful act that Mr. B did. All right. So Mr. B, who is the agent, is required to fulfill their duties towards the principal. So the correct answer will be B. Mr. P appoints Mr. Q as his agent to manage a textile warehouse. Without P's consent, Q delegates responsibility to Mr. R, a sub agent, who negligently leaves the warehouse unlocked, leading to theft of goods worth 20 lakh rupees. Mr. P sues Q for the breach. Which of the following is correct? Q is discharged since R was responsible. R alone is liable since he committed negligence. Q is liable since agent cannot delegate without authority. Both Q and R are discharged. So it is very important that the agent does everything which is given, whatever power is given to him by the principal. Here, the agent gave the goods to a sub agent. Because of his neglect, loss was caused to the principal. So, Q will be liable, the agent will be liable because they delegated authority and it was not permitted. Unauthorized action was done, so the agent will be liable to the principal. Mr. X agrees to sell 500 bags of rice to Mr. Y. Ownership to pass only upon full payment. Y pays half the price and takes delivery of 250 bags. Before paying the balance, Y's creditors seize the remaining 250 bags from X's warehouse. Now, Y claims ownership. Y claims ownership. Which of the following is correct? Ownership passed on partial payment. Y owns all 500 bags. Ownership passed only for 250 bags delivered. Balance remained with X. Ownership passed for all goods since the contract was binding. Ownership never passed. So it was a condition that is imposed, a conditional sale, right? Ownership will pass only upon full payment. But Y paid only half. So the remaining 250 are still owned by the seller, Mr. X. So the ownership of the 250 bags remained with X. Ownership passed to Mr. Y only for the delivered goods. All right. So Y cannot claim ownership They had to pay full price to get the ownership. So correct answer will be option B. Mr. A agrees to sell his warehouse machinery to Mr. B for 50 lakh rupees. The contract states that ownership shall pass immediately, but delivery will be made after 30 days. Before delivery, the machinery is destroyed in a fire. Mr. B refuses to pay, arguing that the sale was conditional on delivery. What will be correct? The contract says that ownership shall pass immediately. This means that the sale was absolute. Absolute. The ownership has already passed to Mr. B. That is, the risk has been passed to Mr. B. I hope you remember the difference between sale and an agreement to sell. So, this is a sale, absolute sale. The property passes immediately, risk is passed to the buyer, and the risk will be borne with the buyer, by the buyer. All right, because the ownership has been passed. So, the correct answer will be option A. It was an absolute sale. Mr. A sells organic Kashmiri saffron to Mr. B, showing a sample. Bulk delivered matches sample, but it is later on found to be Iranian saffron. That is, A had described this saffron to be Kashmiri saffron. The bulk and the sample matched. But it was later found out that completely the bulk and the sample both were not at all Kashmiri saffron. They were Iranian saffron. So, which of the following is correct? Sale is valid since the goods match the sample. Sale is invalid because the goods did not match the description. If any sale is by sample as well as description, it should match both. In this situation, it does not match the description. That is why the sale will be invalid. Invalid. Mr. X sells 1000 cartons of tiles to Mr. Y. X delivers 200 cartons, retaining 800. Circumstances show X intended to waive lien on all goods and Y defaults on the payment. Now we are talking about the Sale of Goods Act. So which of the following will be correct? X can exercise lien on the remaining 800 cartons. X can sue for the damages but not retain goods. X can exercise lien only if insolvency is declared. X cannot exercise lien since part delivery waived lien. So when will the seller lose the right to exercise lien? One of the conditions was waiving the right. So if part delivery made under circumstances, it is showing waiver. So the lien on the balance goods is lost. Right? They cannot withhold, they cannot retain the goods, they cannot exercise a lien. A dispute arises in a partnership firm regarding the purchase of office furniture, which is considered ordinary matter of business. How will the decision be taken? Basically, the question is asking you, how is the decision taken in a partnership firm for an ordinary matter of business? By unanimous consent of all partners, by majority of partners, by the managing partner alone, or by the senior most partner. Ordinary matters, ordinary partners. Ordinary matters require only a majority of the partners, majority. If it is something related to the change in the business, which is regarding the next question. Which of the following changes in a partnership firm mandatory requires consent of all the partners? Unanimous consent is required when change in the nature of the business, purchase of raw materials, hiring of new employees, or day to day operational decisions. So, when they are seeking to change the nature of the business, then unanimous consent is required, plus shareholders will also be approached. All right, so the correct answer will be A. Which acts of the partner violate fiduciary duty? Fiduciary. deriving profit from the firm's transactions for personal use, using firm's property for personal gain, carrying on competing business and retaining profit, contributing extra capital to the firm. Fiduciary means something which is not allowed at all allowed, right? So 1, 2, and 3. But contributing extra capital to the firm is fine. It is not a contravention of any statutory duty. All right. So the correct answer will be A, 1, 2, and 3. Under the Section 19, a partner's implied authority does not extend to. Implied authority means understood. All the partners have these authority. Express means some powers will be given to a few partners, they can be not be given to others. So, which are the second category? Receiving goods from suppliers on credit, drawing and endorsing negotiable instruments, admitting liability in a suit is not allowed. Employing servants for the firm is allowed. Admitting liability in a suit is not an implied authority. It can be done by a partner only by express authority as per the contract, as per the mutual rights and authority between all the partners. So the correct answer will be C. Which of the following statements about partnership are correct? A partnership can be formed orally or in writing. True. A partnership has a separate legal entity. Incorrect. Cancel out. A will be incorrect. C will be incorrect. First is correct. So 1, 3, and 4. Family run by a Hindu undivided family or a Burmese Buddhist husband and wife is not considered a partnership. Partnership arises out of a legal contract to share the profit, not from inheritance. Okay. A partnership firm named XYZ Traders operates without formal registration. One of its partners, Mira, wants to sue a third party for the breach of contract. This is the section 69 that says suing the third party for a breach of contract, or if a third party wants to sue the partnership firm, it must have formal registration. So, can Mira sue a third party? No. She cannot sue the third party since unregistered partnership cannot initiate legal action. This is the section 69 of the Partnership Act. All right. Under the Companies Act of 2013, what happens if a partnership has more than 100 members? It becomes an illegal association. It is automatically converted into a company, it ceases to be a partnership, or government approval is required. So, in a partnership, minimum 2 and maximum 100 members are there. If the number goes below minimum 2, it is no longer a partnership, right? And if it becomes more than 100, it is an illegal association. So, the first and third, option C, 1 and 3. Statement 1 and 3 will be correct. Option C will be correct. All right. Option C will be correct. Next. Shweta, a partner in a firm, wants to review financial records but is denied access by all the other partners. What are her legal rights? So, what are the rights and duties of the partner? It is a mutual right that every partner can participate in the business, share in the profit, and inspect the inspect and copy the firm's book. So every partner has an absolute right to inspect and copy the firm's book. So if she is being denied, this is wrong. Her legal rights say that she can inspect and copy the firm's books. A partnership firm suffers continuous losses, making it financially unviable. A partner files a lawsuit to dissolve the firm. What legal grounds exist for dissolution of the partnership? The court, if the one of the various reasons that we had discussed about the dissolution of a partnership firm, the business cannot continue except at a loss. So the court can order the dissolution of the firm because the dissolution is valid, it is necessary. This is the legal ground which exists for dissolution. The business cannot continue except at a loss. Under the Indian Partnership Act, the firm is liable for a partner's wrongful act if. When can a partner bind the firm even for the wrongful act? If it is committed in the ordinary course of the firm's business, outside the firm's business, with the explicit approval, or it causes a minor loss. So the firm will liable for all the acts of the partners which are done in the ordinary course of business. This partner will be personally liable to the firm, but the firm will be liable to the third parties for the partner's wrongful act. According to the Companies Act, which of the following statements about an artificial legal person are true? A company is created by law, can be dissolved only by legal provisions, correct, as per the 1956 or the 2013 Act. Company enjoys rights similar to that of a natural person. True, it has natural person's rights, many of them, but it does not have citizenship. It does not enjoy the rights under the Constitution of India. It may have residential status, nationality, domicile, but no citizenship. And the company is not necessarily required to physically exist because there are many foreign companies also, and they're operating outside India. They're operating in India through their branches. They do not have a physical existence here. E-commerce platforms are there. Still, they will be recognized. So the third and fourth statement is correct, incorrect. One and two, option D will be correct. As per the company law, an ultra vires transaction means. What is the meaning of an ultra vires? We have discussed about the MOA, AOA, constructive notice, indoor management. Ultra vires means something which is not given in the memorandum of association, which is beyond the legal authority. It cannot be ratified by the members or the shareholders' consent. A company has acted beyond its legal authority. It is void ab initio. It cannot be sued, or a company cannot sue for a ultra vires transactions. Which of the following statements about exception to the constructive notice? What is constructive notice? MOA and AOA are public documents. Any person, any entity that is coming into a contract with the company should have read and completely understood both the document. Okay? And later on, they cannot claim that I did not know that such and such was not allowed. However, the doctrine of indoor management is an exception. Indoor management means that third parties can assume that the internal regulations have been met if it is as per the AOA. So the first and second statement is correct. But doctrine of indoor management applies when external parties have direct access. Incorrect. If the contracting entity had knowledge that there are internal irregulations, still they entered into a contract, protection will not be given. Doctrine of constructive notice allows companies to void contracts that are means no. Doctrine of constructive notice protects the insiders of the company, and indoor management protects the outsiders from internal irregulations. So the correct answer will be option C, 1 and 2. Everyone who's present here, kindly like the video. Do like the video and try to answer. I know we are going a bit fast. I know you all are tired. Still, wherever possible, do answer and like the video. Okay. What was the Supreme Court's ruling in the Mardia Chemicals versus the Union of India? Now we have started with the module C. Module D, you have completely prepared the whole theoretical portion we have revised today, because from module D, 25 to 30, even more than 30 mark questions are asked from module D, right? The questions that we did today and that we did yesterday. In total, nothing will be asked out of it. Okay, now module C. What was the Supreme Court's ruling in the Mardia chemicals? What happened was that the Delhi High Court had declared these acts to be unconstitutional, both the RDB Act and the Surfaci Act. But later on, the Supreme Court declared it constitutionally valid, both the acts. In the Surfaci Act, however, just one section was removed, Section 17, subsection 2, that required that if an appeal is to be made under the Surfaci Act, it requires 75% of the claimed amount. The remaining act was declared constitutional, just this one section was removed by the Supreme Court. So the correct answer is A. Within how many days can an aggrieved person file an appeal to the DRAT according to the Surfaci Act? If a person is aggrieved, then first they will make an appeal to the DRT. If they're aggrieved by an action taken by the secured creditor, they will make an appeal to the DRT. If they're still not satisfied, they will make an appeal to the DRAT within 45 days. So making a complaint to the DRT, 30 days, DRAT, 45 days. DRT has original jurisdiction and Debt Recovery Appellate Tribunal has appellate jurisdiction. Okay. This is true and false. The Surfaci Act is applicable to the housing finance companies, true. Surfaci Act is applicable for pledged securities, also incorrect. Surfaci Act is applicable on mortgage. For the enforcement of mortgage security, court intervention is required? No. The whole purpose of the Surfaci Act was to remove involvement of any courts, to give a fast mechanism for the banks to recover their dues, their NPAs. After receipt of notice from the secured creditor for repayment of dues, the borrower is legally prevented, right? If the borrower tries to transfer or sell off the property or dispose of the property in any way, the borrower can also be detained in the prison. So this will be true. They are prevented from transferring the property. On request of the secured creditor, the district magistrate or the chief judicial magistrate can take possession. Yes, the bank, the secured creditor, can take help of the district magistrate or the chief judicial magistrate for taking possession of the security. Last, when with the management of the company is taken over, the directors are entitled to compensation. No. One of the ways for recovery of dues is taking over the management of the company. And when the directors are removed from their office, they are not entitled for any compensation for loss of office. All right. What conditions must be met by an ARC to operate under the Surfaci Act? The ARC should have a net own fund of not less than 2 crore, certificate of registration from the RBI, provide must be approved by local municipality, regular financial report to the public. Incorrect. The correct answer is A and B only. Certificate of registration from RBI, net owned fund of not less than 2 crore. RBI has the complete discretion. Fit and proper criteria, requirement of fees, furnishing of documents, security, whatever is required, then RBI will grant the certificate. And regular financial reports are not provided to the public but to the RBI. RBI will conduct the inspection of the ARCs. Under Section 4 of the Surfaci Act 2002, which of the following grounds can lead to the cancellation? RBI gives the registration. RBI has the power to cancel the certificate of registration of the ARC. So, which of the following will lead to the cancellation? Failure to maintain proper records, ceasing to carry on the business, failure to conduct mandatory employee training programs, delay in filing the annual report. So, some of these actions can be rectified. Others cannot be rectified. Which of them? Ceasing to carry on the business. If the entity no longer carries on the business of asset reconstruction, license will be cancelled. What is the time frame given to the borrower to discharge liabilities? When under the SARFAESI Act, the secured creditor serves a notice to the borrower has how many days to pay the full debt to prevent the sale of the mortgaged property? The borrower has 60 days. If the borrower does not comply with the notice within 60 days, then the bank can start with the attachment of sale, take over of the management, publish the notice, sell the property. Okay. What is the tenure of the presiding officer of a tribunal? So a DRT is presided over by a presiding officer. What is the tenure? 10 years until the age of 70 years, 5 years or attaining 65 years of age, whichever is earlier. So C. The presiding officer will hold office of the DRT for 5 years or till they attain the age of 65 years. Here you also need to recall what was the qualification. What was the qualification of the presiding officer? You need to remember the qualification of the chairperson of the DRAT as well. What type of property is excluded from the provision? Which property, which security cannot be recovered by the bank under the SARFAESI provision? Urban residential property, security interest created in agricultural land, commercial office space or personal vehicles. So SARFAESI powers cannot be used when the security interest is created in agricultural land. Other things are also there, less than 20 lakh rupees, or if the amount is due less than 20%. This is where the SARFAESI Act provision do not work. Which particulars are statutorily required when the secured creditor gives a notice to the borrower? Then what is required? What details, what particulars should be there in the notice? Details of the amount payable, details of the secured assets intended to be enforced, date of classification as NPA, facility wise securities provided. So the notice mandatorily should include the details of amount payable and the details of the secured asset. But other than these mandatory details, if the secured creditor wants, then they can give the date of classification as NPA and the facility wise securities also. But 3 and 4 are not compulsory. 1 and 2 are mandatory. And if the borrower is aggrieved, they think that some wrong information is given, they will have to make a notice to the secured creditor within a limited time period. After takeover, appointed directors or administrators are empowered. When the secured creditor takes over the property, management of the property, what can the directors and administrators do? Take custody or control of the borrower's property and actionable claim, exercise superintendent's direction and control, derive powers as if from memorandum, retain management contracts of the old directors. Once the management is taken over, the old directors will be deemed to have vacated their office without any compensation for loss of office. So 1, 2, and 3 will be correct. Fourth statement will be incorrect. A person is qualified. Now, what is the qualification of a person to be appointed as a chairperson of the DRAT? If she or he has been or is qualified to be a judge of High Court, correct. Member of the Indian Legal Service for at least 3 years, held the office as presiding officer for 3 years. Retired district judge with 10 years of service is not required. For the presiding officer, it is the person has been or is qualified to be a district judge. For the chairperson, qualified to be a high court plus either of the two, either a member of the ILS for 3 years or presiding officer of a tribunal for 3 years. for the appointed day. Appointed day is what? It is the day on which a tribunal gets established in a particular area. So civil courts lose jurisdiction over recovery claims of 20 lakh and above. Civil courts retain jurisdiction irrespective of amount. High courts and Supreme Court retain writ supervisory jurisdiction. Civil courts retain jurisdiction. No. When from the appointed day when a DRT is established in a particular area, the civil court will lose their jurisdiction. All the recovery claims of 20 lakhs and above will be now with the DRT. Even the pending cases will be transferred to DRT. New cases will be taken to DRT. All right. The writ supervisory jurisdiction still exists with the High Court and Supreme Court. In the Bhanu Construction Company Limited versus Andhra Bank, what was the decision? Civil court orders after commencement of DRT, but before establishment of tribunal are invalid, incorrect. Those orders that were already taken by the civil court before the appointed day of tribunal are completely valid. They cannot be invalidated. Civil court orders prior to the establishment are valid. Correct. So the civil court will lose their jurisdiction not from the enactment of the act, the SURFACI Act or the RDB Act, but from the appointed day, establishment of the tribunal. From that day onwards, the civil court will lose their jurisdiction. All right. Which of the following statements regarding jurisdiction are correct? Application may be filed where the branch of the bank maintains the accounts in which the debt claimed is outstanding. Application may be filed where the defendant resides, carries on business, or personally works for gain. Application may be filed where the cause of action wholly or partly arises. Application may be filed only in the place. Now, as I told you, if you think that some statement is arbitrary or it is negative, limiting the power, mark it as wrong. Here, the fourth statement says that only in the place where the head office of the bank is situated. This statement will be incorrect. So 1, 2, and 3 will be correct. Although you have already studied about all of these provisions, still, if during the exam you think that you're not sure about an answer, analyze the statements carefully. Use this elimination trick. Do not leave it unanswered. You will definitely get positive marks on it if you make a calculated guess. Okay, so 1, 2, and 3 will be correct. Which of the following are true regarding the multi-state cooperative bank proceeding? They may opt to initiate under the Multi-State Cooperative Societies Act instead of DRT. If they filed under the DRT Act, then they may withdraw with tribunal's permission to proceed under the Cooperative Societies Act. Tribunal must dispose withdrawal application within 60 days. If tribunal refuses withdrawal, it must record the reasons. So, the applicability to the cooperative banks was already discussed in the Supreme Court. And it was decided that the cooperative banks have a well functioning recovery mechanism. Still, they were given the option. They were given the option if they want, they can use the recovery mechanism of the Act or they can go with the DRT Act. Both. So, first statement is true, second statement is also true. The tribunal must dispose the application within 60 days is incorrect. Correct answer will be option C, 1, 2, and 4 only. Which of the following powers does the tribunal have in case of breach of its interim or attachment? Interim means temporary. So when the DRT has ordered an interim or attachment order and any person contravenes with it, so what can it do? Attach properties of the person guilty of breach? Yes. Detain the person in civil prison for a term not exceeding 3 months. Correct? Criminal prosecution cannot be initiated. Recovery certificate will not be cancelled. Right? We have discussed this. If after the interim order, the um, borrower, they try to dispose of the property, transfer the property, or sell off the property, then attachment and detain in civil court can be ordered. So the correct answer will be A, 1 and 2 only. Which of the following are correct about the process of a tribunal? Tribunal must pass interim or final order within 30 days from the conclusion of hearings. Tribunal must order payment of interest from the date the debt is found. Tribunal will send a copy of the final order to both the applicant and defendant. Copies may be obtained by parties on payment of prescribed fee. All of these statements are true. These are the steps of the preliminary process of a tribunal. Preliminary process. Right? So all of these steps will be taken by the tribunal. All of these are true. Only banks and financial institutions can be financial creditor. No, any person to whom a monetary debt is owed can be a financial creditor. NBFCs, cooperative banks, they can be financial creditors. Financial creditors exclude debenture holders. No, debenture holders can be financial creditor. A financial creditor is simply a person to whom a financial debt is owed. Correct. Financial creditor is a person to whom the debt has been legally assigned or transferred. Yes. Someone has assigned them a financial debt, then also they will become a financial creditor. So the correct answer should be option B. 3 and 4 is correct. 1 and 2 are incorrect. 1 and 2 are incorrect. Which of the following are correct? I hope you understand that we are practicing questions from the IBC. The CIRP commences from the date of filing of application. The CIRP commences from the date of default. The CIRP commences from the date of communication of order. The CIRP commences from the date of admission of application. Option D. Right? The date on which the adjudicating authority, the NCLT or the DRT, admits the application will be the date from the commencement of the corporate insolvency resolution process. Admission of the application. Why? Because if, let's say, the financial creditor made the application but it was incomplete, or fees was not paid, or it was wrong in a manner, then what would be done? In this situation, a notice will be sent by the adjudicating authority to complete it, and then it will be finally admitted. It will be, the process will start from the date of admission. Which of the following are correct in case of the committee of creditors? In consortium arrangement, each financial creditor is part of the COC and voting share is based on the debt owed. Committee of creditors are responsible to take the final decision. So this is true. Trustee or agent can authorize trustee. Okay. For securities deposit, trustee agent, same. For large class of creditors, the CIRP applies to adjudicating authority. The interim resolution professional can apply to the adjudicating authority for appointment of authorized representative. Correct. All of these statements are true. Which of the following are correct? The resolution professional conducts the CIRP after appointment. Resolution professional replaces the interim resolution professional immediately upon board confirmation. The resolution professional must comply with directions of the COC. The RP has powers to furnish financial information to the COC within 7 days of requisition. So, the resolution professional will not immediately replace upon board confirmation. No, that is incorrect. They will also have to give their consent. The resolution professional will have to give their consent, and then they will be. So the second statement is incorrect. 1, 3, and 4 is correct. 1, 3, and 4 is correct. And like I told you, we will wind up the session at 11. So let us wind up the session now. And some questions I have, see, whatever we have studied today from module C and module D are enough for you to qualify the exam. Still, if you haven't yet practiced the questions from the B and A module, you can do it. It is on the YouTube channel. In this PDF also that I'll upload on the Telegram channel, there are some questions from module A and module B which you can use for your revision. But trust me, whatever you have studied so far is enough. And if you have diligently prepared, followed all the classes, you can definitely score 60 plus in your exam. So from where are you going to get this PDF? I will upload it in the Telegram channel, which you can join by scanning this code. And other than this, tomorrow after your exam, those who have your exam in the first shift, I request all of you to kindly share the topics that are asked for those who will be appearing in the second and third shift, right? So make sure that you join the Telegram channel if you want the PDF, and make sure to be active and share your results and the questions asked, topic asked in the exam after your first shift. So that is all. And do not stay for much long, and take proper rest and go to sleep. Wake up with a fresh mind in the morning, and you have the PDFs for all the four modules. You can use it for your revision in the morning. Just go through the PDFs once, although all the concepts are already clear to you. All right. So thank you so much, everyone, and I wish you all the very best for your exam tomorrow. Now we will meet for the elective paper. Those who have opted for rural banking elective paper, now we will meet tomorrow in the evening. Before that, in the exam analysis. So I wish you all the very best, and have faith in your preparation. Be confident. Enter the exam with a fresh mind, confidence, and attempt all the 100 questions. Do not leave anything unanswered. I'm very sure that you will qualify the exam. Right now, just give me 5 minutes. I will upload in the Telegram group. All right. All right. So, good night, everyone. Take care. All the best. And let us meet tomorrow after your exam in the exam analysis. Thank you.